Sachin, good morning. Good morning to all of you students. Palak, very good morning. So students, Amruta, good morning. So now let's start with this particular session, students. Hopefully all of you have revised the earlier session, students. Have you all gone through the earlier two sessions, students? Ravi Chandran, Vyethi, have you all gone through the earlier two sessions, part 1 and part 2? Do say. Praveena. So students, if you have gone through the earlier two sessions, if you have not gone through the earlier two sessions, students, then in that case, the link, you will get it in the description box. The link of that particular lecture of all the 4 parts will be in the description box. Again, in the month of March, the link of 5, 6, 7 and 8, that is, I'll give you in the first week of March. So that will be shared with you in the first week of March. Always keep in mind, students, one thing. Saturday and Sunday we are having DT revision lecture. We'll say, but sir, this time Saturday was not there. Very true, students. This time Saturday was not there. I could not take yesterday. So I'm taking today 2 sessions. One right now and another in the evening. One right now, another in the evening. Okay. So let's target, students, the non-resident taxation and transfer pricing. I again will tell you that the chart which is there, the chart book, students, you can take from the bookshops and all. You can just, in fact, if you want to take a note of the number, 9779430034 is a bookshop number. So that anyone who wants to take a chart, students, you can buy it from the bookshops. Okay. So that is what it is. I will 9779430034. That is the bookshop number. Fine. Now, students, we'll start with this particular part now. Sachin? Yeah. So now, students, let's start with this one. Today is an NR taxation transfer pricing. Now with the 30 mark stake of this particular area, this is really a huge one. So students, I'll start first with the NR tax and then I'll switch to the non-resident taxation. So that is first the NR taxation, thereafter the transfer pricing. Let's start to look upon each and everything one by one. Students, obviously couple of charts I would want you to make also. Please be very careful, students. Couple of charts you people also will make. Are you getting this one, students? So therefore, in this context, couple of charts, students, you people will also make, because why I'm saying so, some of the areas are so tricky, it is important to revise some couple of areas by virtue of chart. So I want all of you to make those couple of charts which I'm going to take you through on this one. Let's start with this particular part, students, now. So NR taxation, students, what are the areas and the topics which are being there? Quickly, just a very bird's eye view to all of you, students, on the NR topic. Residential status, total income, section 9, income deemed to accrue arise in India. Some NR exemption is also critical. TDS provision of section 195. Thereafter, double taxation of modern agreement and the equalization levy. So these are the various particular aspect of the NR taxation which is getting covered right now in this particular area. Thereafter, there is a transfer pricing which is separately covered. And then there are some theoretical chapters which is there in this context of the non-resident taxation. We'll start with this. Students, number 1. All of you pay attention. In the residential status, you all are aware that 2 particular important area which is there is about the residential status of the individual and the residential status of the foreign company. If at all any probability of the question that they will target in the examination has to be between the 2 of this particular person. The 2 persons, which are those 2 persons? Individual, and the second one is the foreign company. Let's take the first one, that is the individual. Let's all of us take the first case of the individual students. Individual students they have got 2 basic tests. Out of the 2 basic tests, they have to satisfy one of the 2 basic tests. So the 2 basic tests are, number 1, that the minimum stay during the previous year should be 182 days. The minimum stay during the previous year should be 182 days. So your previous year, students, is previous year 21-22. So the minimum stay during the previous year 21-22 should be 182 days. Or the second basic test is that the minimum stay during the previous year should be 60 days. And in the last four preceding previous year, the minimum stay should be 365 days. So if you satisfy one of the two basic tests, then your status will that be of a resident. Your status will that be of a resident. This is how you will become a resident. Satisfy one of the two basic tests. Okay, now there is an exception. Students, now there is an exception whereby the second basic test, which is the second basic test, 60 days in the current previous year and 365 days in the last four preceding previous year. So there is an exception whereby the second basic test of 60 and 365 days is not applicable, and that is in respect of, I'm just revising the prominent one, that is in respect of a citizen of India. Repeat with me, students. When you will leave India for the purpose of taking up the employment outside India, then you will leave India through the Indian passport. You are leaving India through the Indian passport, and if you are leaving India through the Indian passport, students, then all of you are aware that you are a citizen of India. Okay, so therefore a citizen of India leaves the country for the purpose of taking up the employment outside India. So if that is the purpose why if you are living in India for the purpose of taking up the employment outside India, then what did we said, students? Repeat with me. What did we said? We said that the basic test of 182 days only shall be made applicable. The basic test of 182 days only shall be made applicable. Second basic test not applicable. Now there is another particular case wherein the basic test of 182 days only will be applicable, which means that the second basic test will not apply, and that is when the citizen of India or a person of Indian origin, they are coming in India for visit purpose. Now those, again I'm talking those who are looking for the bookstore for the charts and all, students, so that I don't have to keep repeating this one. Bookstore for charts primarily. So you can just connect, you can just WhatsApp this particular thing, so that I don't have to keep repeating this particular thing. The bookstore that you can primarily contact them and you can buy them from them. Okay, fair enough. Now coming to this one, you can do a WhatsApp primarily. That should be sufficient. Now, anyways, students, in this context, what did I told you? The second basic test which has been considered, students, which has been considered in this regard is about what? The second situation. The first situation, students, I told you, where only the first basic test has to be considered. The second basic test becomes redundant. What is that? When a citizen of India leaves India for the purpose of the employment, for the purpose of taking up the employment outside India. What about the second basic test, students? What about the second case where the second basic test is not applicable? When a Indian citizen or the person of Indian origin, possibilities are there, students, that after you have left India, possibility are there that you may have taken up the citizenship of that country. So now when you are coming back in India, then your status is of person of Indian origin. So you may not be a citizen of India, you may be a person of Indian origin. So students, the second case where only the first basic test of 182 days would be applicable, the second basic test of 60 and 365 days will not be looked upon, is when a citizen of India or a person of Indian origin, they are coming in India for visit purpose. Visit purpose, students. Okay. Now on this particular part, students, be very careful. Students, all of you will now take a chart. After this, students, now you will take a chart. I want all of you students to take this particular chart. Quickly! So, every one of you will have to write, students. You don't have any option in this regard. Every one of you will have to write in this case. Please take a note of it. So, a person of Indian origin or a citizen of India, these are small but short charts which we are preparing. Or a citizen of India who is coming in India, comes in India for visit purpose. Comes in India for visit purpose, students. So if this is what the scenario is, be careful, students. Be careful now. What we will say, students, we will say, please have a look. In this case, please ask the question. The question that needs to be considered is whether the total income, exceed rupees 15 lakhs. Whether the total income exceed rupees 50 lakhs. In the bracket, excluding the income from foreign sources. Excluding the income from foreign sources. This is the question that you have to ask. The answer, as you all know, can be either yes or no. The answer, as you all know, can be yes or no. So, whether the total income exceed rupees 15 lakhs, excluding the income from foreign sources, the answer can be yes or it can be no. If it is yes, students, then in that case, if it is yes, then the basic test shall be, then the basic test to be considered. What is the basic test to be considered, students? Herein, stay in India for how many days, students? 182 days in the current previous year. 182 days in the current previous year. Or what? In this case, or herein, be careful. This is the minimum 182 days in India. This is minimum. By the way, student, this is minimum. Yes, Sachin. And here it would be minimum 120 days. Minimum 120 days in current previous year. Plus what? Plus in the last 4 preceding previous year. In the last four preceding previous year. Last 4 preceding previous year. Minimum stay should be how much? Minimum stay should be 365 days. So the basic test to become a resident would be how much? Would be one of the two. If the answer is no, then it is the normal way. What is the normal thing? The minimum stay in previous year. Minimum stay in previous year is 182 days. Minimum stay in the previous year is 182 days. I hope that all of you are clear with this one now. This chart is therefore applicable for whom, students? This chart is applicable for whom? This chart therefore is applicable in the case of a person of Indian origin or a citizen of India who is coming in India for visit purpose. What is the question? First question that you need to ask, students? What is the first question that you need to ask? The first question that you need to ask is whether the total income, excluding the income from the foreign source of such person, is exceeding rupees 15 lakhs is the first question that you need to ask. If the answer is yes, the total income excluding the income from foreign source exceed rupees 15 lakhs, then we will say that for this particular person they have got two basic tests. They have got the two basic tests in this context. So in this case, if the answer is yes, then they have got two basic tests. One of the two basic tests they need to satisfy. If the answer is yes, then in this case they need to satisfy one of the two basic tests. First one, already we know 182 days during the current previous year, and the second one is that now that 60 days get replaced with 120 days, and therefore it will be read as that whether his minimum stay during the previous year is 120 days or above, and the second one is that in the last 4 preceding previous year whether his minimum stay is for 365 days. So he need to satisfy either one of the two basic tests and he will become a resident. Either one of the two basic tests and he will become a resident. But if you say the answer is no, if you say, friends, the answer is no, then in that case, meaning thereby his total income excluding the income from foreign sources does not exceed rupees 15 lakhs. If you say the answer is no, then the minimum stay in the previous year should be 182 days, the normal one. That is what we are discussing. So that is what, friends, this is one of the very important point. Now comes this one particular concept of section 6(1)(a). Now comes one of the important concepts, students, and that concept is the concept of section 6(1)(a). So students, in this context, in the case of section 6(1)(a), are you aware of that particular point, students? 6(1)(a), very important particular provision, and there is a one small amendment which has also been there. Students, supposingly as per section 6, just now the basic test that we have discussed of 182 days or 60 days, as the case may be, supposingly by virtue of those tests he is a non-resident. He is a non-resident. But then there is still one particular case as per section 6(1)(a) where even if he is a non-resident as per this two basic tests of 182 days or 60 days in the current year and 365 days in the last 4 preceding previous year. So even if he may not be satisfying any of these two basic tests, and because of that reason, as per the general condition, he is a non-resident. He is a non-resident. But still there is one case wherein he can become a resident. And that is the case where, supposingly, students, this particular person who is a citizen of India, be careful, this particular person who is a citizen of India has got his foreign income, which is not liable to tax. Repeat with me, students, which is not liable to tax in that particular foreign country by any reason, be it domicile, residence or any reasons, but it is not liable to tax in the foreign country. So in that particular case, he shall be deemed to be the resident in India. He should be deemed to be the resident of India. But again, students, this particular provision of section 6(1)(a), which creates a deeming fiction of residency for a citizen of India, is applicable only for that citizen of India. It is applicable only for that citizen of India whose total income, students, whose total income excluding the income from foreign source exceed rupees 15 lakhs. Exceed rupees 15 lakhs. So this particular provision is also a specific provision which was introduced last year and accordingly applicable to a citizen of India who has got the total income excluding the income from the foreign source, which is exceeding rupees 15 lakhs. And the third one is its foreign income is not liable to tax, in the foreign country by way of residence or his domicile or for whatever be the reason, but it is not liable to tax in the foreign country. So there are three conditions to be looked upon, to be seen for the applicability of the deemed residency under section 6(1)(a), and they are, repeated for the last time, citizen of India who is having a total income excluding the income from foreign sources, who has got the total income excluding the income from foreign sources and which exceed excluding the income from foreign sources which exceed rupees 15 lakhs. Rupees 15 lakhs. And the third one happens to be he has foreign income which is not liable to tax, in the foreign country by virtue of residence, domicile, or any other reason. If these three conditions are satisfied, then this citizen of India will be deemed to be a resident in India during the previous year. Now students, please be very careful. Always keep in mind this point, that if you happen to become a resident, because of these two reasons. Which two reasons, students? The reasons, as you all know. Reason number one is that just now we discussed the two recent amendment. If you happen to become a resident because of the two recent amendment, and which is the two recent amendment? The two recent amendment, as I told you just now, this one. The two recent amendment which I happened to told you just now, students. I think all of you are aware of it. So which are the two recent amendment? The first one happens, this one. If because of this stay of 1 in 20 days, if you are a resident, so if resident, then what? If resident, because of this basic test, students, this basic test, then such individual shall be what? R and NOR. If resident because of this basic test, students, then such individual shall be R and NOR. Declared. You will say, sir, but for resident and not ordinary resident, we have to look at two additional tests primarily. But what did I tell you, students? What did I told you? That in this particular case, if he becomes a resident because of this particular reason, then it is declared that he is a resident and not ordinary resident. He is a resident and not ordinary resident. Similarly, for this particular 6(1)(a) as well, students. Similarly, for this 6(1)(a) as well, the same proposition will apply. So here also, if he is a resident, if he becomes a resident, then the status would be R and NOR. R and NOR. Always keep in mind this point. Okay. So just keep in mind this particular point. You will say, sir, what is the advantage of being an R and NOR? So you have any of your foreign income. Please pay attention. The difference that you will feel if you become R and NOR is that if you have got any of your foreign income, students, excluding the income arising from a business or a profession which is controlled from India, excluding the income which is arising from a business or a profession which is controlled from India. Excluding the income arising from the business or a profession which is controlled from India, in that particular case, students, what is that we are going to say? In that particular case, we will say that all such foreign income of R and NOR, excluding the income from business or a profession outside India but controlled from India, those all foreign income except for this business income, entire foreign income which is accrued outside India and received outside India will not be taxable under the Act. So please always keep in mind which is that particular point that we are raising in this case. Again, repeat with me, students. If you are a R and NOR, then all your foreign income which you receive outside India and which is accrued outside India, except for one foreign income. Which is that foreign income? The business or a profession, the business income or a professional income which is also accrued outside India, but it is from a business which is controlled from India. That business or a profession is controlled from India. Then please don't consider that. Then that income is taxable in India. Okay, even if you are R and NOR. But all the remaining foreign income accrued outside India and received outside India those foreign income will not be taxable for an R and NOR. Those foreign income will not be taxable for R and NOR. Is that clear to all of you students? So this is only one very important observation which I thought just to have it with all of you. With that, students, we are into the last particular point, liable to tax. This is very important, students. See, as we all know, the three conditions are required for becoming for an individual to become a deemed resident under section 6(1)(a). There are three conditions which is required for an individual to become a deemed resident under section 6(1)(a). And which are those three conditions? Condition number 1, students. Condition number 1 is that he should be a citizen of India. Second one is what, students? His total income excluding the income from the foreign source should exceed rupees 50 lakhs. And the third one, his foreign income is not taxable. His foreign income is not taxable by any country by reason of his domicile. The wording is, his foreign income is not liable to tax in any country by reason of his domicile, residence, or any other reasons. So the phrase is, it should not be liable to tax. Only then you will be deemed resident under 6(1)(a). It should not be liable to tax in the foreign country. So if it is liable to tax in the foreign country, students, then please tell me whether 6(1)(a) will it be applicable? Answer is no. If it is liable to tax in the foreign country, then whether 6(1)(a) will it be applicable? The answer is no. Always keep this particular point in mind, students. Always keep this particular point in mind. I hope that every one of you agree to this one. So now the bottom line is, sir, what is this liable to tax, Amrita? This is the real game, Vyethi, isn't it? So that is the real point now, students. What do you mean by the term liable to tax? So liable to tax in relation to a person and with reference to a country. In relation to what? To a person and with reference to a country means what? That there is income tax liability on such person, okay, and include a person who has subsequently been exempted from such liability under the law of that country. So effectively, students, it will mean this. Please pay attention. Effectively, it will mean this. What does it mean? Effectively, it will mean, say for example, students, please tell me one thing. Supposingly a person has got an income in country A. So income in country A of say rupees 100. Income in country A of say rupees 100. Then from this income in country A of rupees 100, you are reducing, students. You are reducing what? There is an exemption which is given to you. Students, there is an exemption which is given to you in country A. There is an exemption which has been given to you in country A of rupees 100. So please tell me, is it liable to tax in the country A? Is the question to be answered by all of you. If income in country A is 100 and there is an exemption which is given to you in country A which is also of rupees 100, question to all of you therefore is it liable to tax in country A? Please tell me, students, quickly. Is it liable to tax in country A? What is your take? Is it liable to tax in country A? And the answer is yes, it is liable. Sachin, Vyethi, it is liable to tax in country A, and the answer is yes, it is. Yes, it is, students. You'll say, sir, but how come? Just see the definition again. What the definition is saying, students, you have to be extremely careful about the definition. And shall include. They are saying here to all of you, and shall include what? Shall include. In this context, indeed, students. It shall include a person who has subsequently been exempted from liability. So he is liable to tax, although he is not liable to pay the tax. Is he liable to tax? Yes. Is he liable to pay the tax? No. Is he liable to tax? Yes. Is he liable to pay the tax? No. But what is important for us? Liable to tax or liable to pay the tax? It is liable to tax and not liable to pay the tax. So we will go with liable to tax and not liable to pay the tax. So we don't use any other phrase, they will give you a 0 mark. So you will have to use liable to tax. So is he liable to tax? Yes. And tell me, if he is liable to tax in country X, then whether the deeming fiction of 61A, the deem residence test of section 61A, will that be applicable? The deemed residential status of section 61A, will that be applicable or not? What is your take? Answer is no. Because to apply section 61A, what is required? That the individual shall not be liable to tax. But if that individual is liable to tax, then 61A not applicable. 61A not applicable. So in this example, students, in this example which I have told you, whether 61A is applicable, answer is no. 61A in this example is not applicable. 61A in this above example is not applicable. I hope that all of you are now clear with this one, students, in this case. So this is what it is. This is what it is, students. Fine, students. Clear to all of you, students. Okay, so there is one small question also which I have given it to all of you. There is also a small question, students, which I have also given it to all of you. You can just simply go through the same. Okay, if those who are wishing to even go through that particular question, please, through that chart, please go through this question. Let's come to our next particular category, and that is for the foreign company, students. Be careful, that is for the foreign company. Now, friends, foreign company, very quickly we are going to do this foreign company test, because I think many of you are aware, and this is very straight and simple, but still couple of points is very important, otherwise you may unnecessarily make an error out of it. So students, first of all, this chart which is there for the company, as you all are aware in this context. So again, friends, herein the chart book, I'm just telling you the store number. You can just try to read, otherwise people keep asking in the chat. It becomes very difficult for me to again this is an interruption. So those who want to do it, so they can just put a WhatsApp over here and they can accordingly take it. Okay, so they can do the needful. Okay, so please don't ask me in this particular thing. I will not be in a position to answer. Now let me because revision is the key herein right now. Students, for a company part, always keep in mind, a company, if it is an Indian company, if the answer is yes, then you are always a resident. If the answer is no, then the place of effective management in India, in that scenario, through POEM test is yes, resident. If no, non-resident. POEM test, if yes, resident. If no, then non-resident. That is how the things has to be looked upon. POEM test, if the answer is yes, resident. If the answer is no, then it is non-resident. I hope that all of you are clear with this one. All of you are clear with this one, students. Okay, so this is precisely how the things has to be considered. So POEM test, primarily, how you are going to say about it, students? POEM test, in this context, if he is a resident, in this context, answer would be yes. And in that case, if he is an Indian company, then the answer is yes. If it is not an Indian company, then essentially they are targeting what? Targeting a foreign company. If it is not an Indian company, then essentially they are targeting a foreign company. Then the foreign company will become a resident in India only if the foreign company satisfies the active business outside India test. What the foreign company is satisfying? They are satisfying the active business outside India test. If this test is satisfied, then yes, we will say that the POEM of then the foreign company whose POEM is in India, we will say that only if the POEM of that foreign company is in India, we will say that the foreign company is a resident in India. Only if the POEM of the foreign company is in India, we will say that the foreign company is a resident in India. Now, how to decide where is the POEM of a foreign company? How to decide where is the POEM of the foreign company? For that purpose, students, we have to fall on whether the foreign company, students, is it fulfilling the active business outside India test or not? Is it fulfilling the active business outside India test? So the question is they are fulfilling this, and the second one is they are not fulfilling it. So if they are fulfilling it, students, then the poem is presumed to be outside India. If the foreign company is fulfilling active business outside India test, then the poem of that foreign company is presumed to be outside India, provided the majority of the board meetings are also taking place outside India. You have to write it very carefully, students. If you don't write this provision correctly, your marks will get deducted. So please be very careful. You will have to write what? Please repeat with me, that if the foreign company is satisfying the active business outside India test, then you will write that the poem of such foreign company is presumed to be outside India if the majority of board meetings are taking place outside India. If the majority of board meetings is taking place outside India. Is that clear to all of you? So if majority of board meetings are held outside India, this is what you should keep in mind. But there is one exception, but this please students, this you are going to write only when it is been provided in the question in the exam. So if it isn't there in the question in the exam, please try to avoid quoting this question herein. What is this, students? That however, if the de facto decision making authority, what is it, students? That if the de facto decision making authority is not the board of director but the Indian parent or resident, so in that situation, students, the poem shall be in India. So if that foreign company whose active business is outside India, who is holding the majority of board meetings outside India, but in respect of that foreign company, the de facto decision authority is the Indian parent company or an Indian resident, then the poem of that foreign company will then be considered to be in India. The poem of that foreign company will then be considered to be in India. But only one precaution, students, please don't base your answer on this exception of de facto decision making authority. Please don't base your answer on this exception, which is the de facto decision making authority in India, unless the question is very categorically targeting this particular part. So unless the question is targeting this particular part, you will not make any reference of the de facto decision making authority in India. Your answer will be based on what? Your answer will be based on, students, that the poem will be presumed to be outside India if the majority of board meetings are held outside India. If the majority of board meetings are held outside India, I hope that every one of you are clear with this particular proposition. So that is for whom? That is for a company who are fulfilling the active business outside India test. Now what about the other company, students, who are not fulfilling the active business outside India test? So for those company, the two keywords are that the foreign company which is not satisfying the active business outside India test, please don't jump into the conclusion. For all these foreign company which are not satisfying the active business outside India test, you have to look into two things. Which are those two things? Who is that person who is taking key managerial or commercial decision of that foreign company? Who is that person who is taking the key managerial or commercial decision of that foreign company? And the second one happens to be where that decision is taken. So who and where is the game, students? Who and where is the game? And if that who and where happens to be in India, that who is that person who is taking key managerial or commercial decision of that foreign company and where that decision is taken. So if that who and where happens to be in India, we will say what, students? We will say that the poem of that particular foreign company is deemed to be in India. We will say if the poem of that foreign company is deemed to be in India. So ultimately, students, it will boil down to this. And what is that, students? Active business outside India test. Ultimately, students, it will boil down to what constitute the active business outside India test. So the first box will tell you whether the business of that foreign company is active or not, and the second box will tell you whether it is outside India or not. So that is the case. In a very simple word, a business of the foreign company or the business of the foreign company is active if its passive income does not exceed 50% of the total income. if the passive income does not exceed 50% of the total income, in that particular case, students, we will say that the business of that particular foreign company is active. So if the passive income does not exceed 50% of the total income, we shall say that the business of that particular foreign company is active, and the passive income constitute everything except PGBP. That is royalty, FTS, dividend, interest, rent. So every income other than PGBP, royalty, FTS, dividend, interest, rent, capital gains. Okay. So other than PGBP, all the income which we have just now mentioned it. And there is one aspect of PGBP income which is also targeted. One aspect of PGBP income, students, which is also targeted. So you will say, sir, which is that aspect of PGBP which is also targeted? They are saying from the transaction where both the purchase and the sale of the goods is from or to the E. What does it imply, students? In this case, it implies that I am purchasing the goods from the AE, and the same goods, students, I am selling it to my another AE. So the purchase is also taking from the AE, and the same goods are also being sold to my another AE. So if both the purchase as well as the sale are from and to the AE, then in that particular case, students, what is that we are going to say? We are going to say that this will be considered to be a part of a passive income. This will be considered to be a part of the passive income. But if the purchase is from the AE, sale is to a non-AE, or purchase is from the non-AE, or the sale is to an AE, then whether this profit from this leg of transactions, will that be taken into account to determine whether it is a passive income? Answer is no. This will not be considered to be a passive income. So to be a passive income, the transaction has to be both of purchase as well as the sale of the same goods should be from and to the AE. Should be from and to the AE. Only then the profit arising from those transactions will be a part of the passive income. And if the total passive income does not exceed 50%, of total income. When I say does not exceed 50% of total income, it can mean that it can be up to 50% of total income, doesn't matter. But it should not exceed 50% of the total income. In that particular case, students, what is that we are going to say? We will say that the business is active. We are going to say that the business is active. Okay, so business is active. Answer is yes. And what about the next particular proposition, students? Here, and now, once the business is active, go to the next one. So it is not only important that the business should be active, we have also to see whether this is outside India or not. So to be outside India, the following presence in India should be less than 50%. To consider the business of the foreign company outside India, the following presence in India should be less than 50%. Now, which are those following presence in India which should be less than 50%? 1, 2 and 3. First one is that the total asset which is situated in India primarily should be less than 50%. Similarly, the total number of employees situated or resident in India, that also should be less than 50%. And the third one is the payroll expenses on the employees in 2 above compared to the total payroll expenditure. The payroll expenses on the employees in 2 above compared to the total payroll expenditure in this particular context is also less than 50%. So 1, 2 and 3. 1, 2 and 3, students. In this case, if it is less than 50%, if 1, 2 and 3, if it is less than 50%, then what is that we will say, students? We shall say in this regard that, quickly students, we shall say in this regard that the, exactly students, exactly. So in all the three cases, if it is less than 50%, then only it is outside India. Okay. One common mistake that students do, they are asking every time, sir, if out of 3 any 2? No, all the 3 has to be satisfied, and only then it will be in outside India. case. But if out of three, only two is being satisfied, one is not satisfied. Like for example, students, there were total 100 employees of that foreign company. Total 100 employees of the foreign company, out of which 97 employees were outside India. So you felt good about it. But those 3 employees happened to be the CEO, president and vice president. They were resident in India. And for these 3 employees who were CEO, president and vice president, who were resident in India, for them you are paying a salary which is 2 times more than all the 97 employees. Then what we are going to say? We are going to say then the active business outside India test, the ABOI test will not be fulfilled. And if the ABOI test, students, is not fulfilled, if the ABOI test is not been fulfilled, then in that particular case, we will check the poem based on who is the person who is taking key managerial or commercial decision of that foreign company and where those decisions are being taken. Who is the person who is taking the key managerial or commercial decision of the foreign company and where those decisions are being taken. And if those decisions are taken in India, we shall say what, students? That in this particular case, the poem of that particular foreign company will be considered to be in India. And if the poem of that foreign company is considered to be in India, then all of you are aware it will be considered to be a resident in India, students. Yes, Amruta. Sachin, Amruta, all the students are clear with this one, students? Any doubt or any particular point that you want me to explain it once more? I'll explain it quickly. Otherwise, then once I go, thereafter, no second chance. In this case, now students, in this regard, students, herein, there is a case for all these terms are important, students. All these terms are important that we have just now have used. Which terms I am talking about it? Which terms that we are talking about it, students? So, in that scenario, in this context, students, anyone, just before I proceed, anyone have got any query up till now? Please tell me this quickly. Otherwise, once I proceed, I am not going to come back. Any query, students? If no query, then in that case, in the meantime, then like the video. If no query, then the protocol is you need to like this video. That is the protocol. Any query, students? Amruta? Perfect. I think every one of you people are sorted out with this. Sachin? So in that situation, students, now be careful. We have to decode those terms that we have used in ABOI test. Which term? The term like asset test. What is this asset test? What is it? Physical number or the value? It is the value. For the asset test, it is a value. For the payroll, when you talk about employee and payroll, we are taking both the numbers as well as the value, the salary, isn't it? The salary in INR. So in that case, when you talk about the asset test, the presence in India should be less than 50%. Then be careful, students. It is the value, not the number. So therefore, in this context, students, if you see over here, income. First of all, you will say, sir, but what about the passive income and the total income in the active business test? When you talk about the active business test, then at that time there were passive income, there was total income. How this particular income will be computed by the foreign company? So students, the computation for tax purpose in accordance with the law of the country of incorporation. So whatever for tax purpose in that foreign country, the foreign company would have computed the income. Those are the data and the stats that will be taken into account while deciding the active business outside India. Those ABOI tests will be based on the data and the stats which are being considered by the foreign company for tax purpose in their respective country. But supposingly if there is no such tax exist in the foreign country, possibilities are there that the foreign country is a tax-free zone. So if the foreign country is a tax-free zone, then in that situation, students, you will have to then go with what? We'll have to go with the books of accounts. You will have to go with the books of accounts, students. So as per the books of accounts, where the law of the country of incorporation, in that case, whatever is the data that you have furnished in their financial statements, those data will need to be considered for the purpose of determining all the elements which are used in the active business outside India test. All the elements which are used in the active business outside India test. Now coming to the asset part, here if you see A, B and C. In case of an individually depreciable asset, in the case of what? An individually depreciable asset, what we will say, the average of its value for tax purpose in the country of incorporation of the company at the beginning and at the end of the previous year. The average of its value for tax purpose in the country of incorporation of the company at the beginning and at the end of the previous year. That is point number A. Point number B in this context, in case of pool of fixed asset being treated as a block of depreciation. So here, students, please understand, if supposing the depreciation, if the asset is a depreciable asset and the depreciable asset in those particular foreign country, the depreciable asset, students, in those particular foreign country are under the single asset method, not the block method, fine, not an issue. Take the opening WDV and the closing WDV. Take the opening WDV and the closing WDV and do the average. SSR and do the average. Okay. For point number B, what we are talking about it, students, in the case of pool of fixed asset, in the case of what? The pool of fixed asset, mean the block concept. So in that situation, students, again take the opening WDV of the block and the closing WDV value of the block. The opening WDV value of the block and the closing WDV value of the block is what needs to be taken. And last but not the least is the case of any other asset. In the case of any other asset, apart from the depreciable asset, it has to be the book value. Now, don't take any average for the book, any other asset. You will not be taking any of the average in this case. Don't make this mistake of taking up the average. Is that clear to all of you, students? Don't do the mistake of taking up the average in this particular case. I hope that all of you are clear with this particular proposition. Number of employees, when you do the number of employees, students, please do include in the employee those employees who may not be directly employed with the foreign company, but who may not be in the payroll of that particular foreign company, but they are being hired and they are performing the same tasks as those employees which are in the payroll of that foreign company. So there are cases where in India, their people will not be taken up in the payroll, but they are being hired and they are performing the similar tasks which otherwise the employee in the payrolls are performing for that foreign company. Then even those particular employees will be taken into account. Even those particular employees will be taken into account. That is for the payroll test. And last but not the least, students, the last but not the least, as you all are aware, in the context of the, okay, so in this case for the employees, yeah, Sachin, you are correct. This is about the contract employees. This is about the contract employees. So students, for these employees also, you have to take average of their strength, average of the employee strength as on the first day of the previous year and the last day of the previous year. The first and the last day of the previous year, that is the average. And last is the payroll, whatever is a payroll which has been given to those employees, which will also be considered. I hope that every one of you are clear to this. If that is the case, students, shall we proceed further? So the poem test is done. Students, congratulations, the poem test is done. Now, just one point I want to discuss before we proceed further. This point. Scenarios where poem cannot be considered in India. Students, scenarios where the poem cannot be considered in India. So in the case when the poem is not considered in India, students, they will try to manipulate the data. A foreign company, they can say the foreign company is a subsidiary of or wholly owned subsidiary of an Indian company. Chances are very high. Are wholly owned subsidiary of an Indian company, students. If that is what they are trying to give it to you, that they are a wholly owned subsidiary, so will that be, in this case, the foreign company, students? Will this make the foreign company a resident in India? Will this make a foreign country a resident in India just because it is a wholly owned subsidiary of an Indian company? Just because it is a wholly owned subsidiary of an Indian company, is that the criteria for a foreign company to be considered as a resident in India? Is this what is the criteria? And the answer is no. We are very clear now that the criteria for a foreign company to become a resident in India is only when its poem is situated in India. Only when its poem is situated in India. That is the only criteria. So I hope that every one of you are clear with this one. Okay, so that is the point which you should be clear about it. By the way, just if you allow me, students, just if you allow me a departure from a non-resident taxation for just a minute, then this combination since I made, so this is a holding company and this is a subsidiary company. Now students, they will be giving a dividend. They will be giving a dividend to them, isn't it? Now the dividend that they will be giving, students, you should be aware there is a provision of 115 BBD. I am just doing a departure, students, by the way. Okay, so just I got tempted to discuss this, so I am just discussing this particular point. So here is a holding company, okay, which is an Indian company. The subsidiary company is a foreign company. Obviously, being a subsidiary company, you will then declare the dividend to the holding Indian company, which is a resident in India. So there is a provision of 115 BBD where the Indian company or where the Indian company is holding voting power in the foreign company of minimum 26%, then any dividend received from such foreign company, will be taxed under section 115 BBD, and that will be taxed in the hands of the Indian company at a flat rate of 15% without any deduction. Students, you should always keep these points in mind, because as far as your examinations are concerned, you don't know, they are only giving this foreign company and Indian company for structuring purpose. They may only give you foreign company and Indian company for structuring purpose. That is only for structuring. But ultimately, they may use the provisions like 115 BBD. So I'm just warning to all of you. Just keep in mind these things. Now, students, tell me one thing. If a foreign company becomes a resident in India, then what shall be its tax rate? The question to all of you, therefore, is, if the foreign company becomes resident in India, how it becomes resident in India? Because its poem is situated in India. So if a foreign company becomes a resident in India because its poem is situated in India, the next question to all of you is, what will be the tax rate of such foreign company? What will be the tax rate of such foreign company? What is your take, students, in this case? What is the tax rate of such foreign company? So the tax rate of such foreign company continues to be at 40%, students. Continues to be at 40%. Please don't say that the tax rate of such foreign company is 30%. Always keep in mind one thing. Students, the tax rate is always determined on the basis of the category of the person. So if the person is a foreign company, then it is 40. If it is a domestic company, it is 30. The residential status is only relevant. For the purpose of determining the scope of the total income which is chargeable to tax under the Act. Please remember one thing, that the residential status is only relevant for the purpose of determining the scope of the total income which is chargeable to tax under the Act. That is the only limited purpose of the residential status. Whereas what, students? Whereas the tax rate will only depend whether the company is a domestic or a foreign company. So if it is a foreign company, then even if even if it may be a resident in India because its poem is in India, even if it is a resident in India because its poem is in India, the fact will remain that you will continue to tax this foreign company. You will continue to tax this foreign company at the rate of 40%. On the rate of 40%. Is that clear to all of you, Shelly? So the residential status is only to determine the scope of the total income. The actual tax rate depends upon whether the company is a foreign company or a domestic company. I hope that every one of you are clear with this point now. Every one of you are clear with this particular point now. Fine, students. So this is the game that has to be played over here. Okay, so this is the game that you have to play it over here, friends. Now, friends, there is a one very interesting point. Palak, Sachin. Please keep in mind these things. Shelly, please keep in mind, students, over here this thing. If the foreign company becomes a resident in India, students, last point, students, quickly. If the foreign company becomes a resident in India, then in that particular case, there would be some challenging issues. Like, for example, up till now, this particular foreign company was never assessed in India, because its poem was outside India, and therefore for India it was always a non-resident. But suddenly in this year, the foreign company poem is situated in India, and therefore it has become a resident in India. Now, what will be the challenge? Being a resident in India, its world income will be taxable. And if its world income will be taxable, then the computation that you will do will be as per the manner which is laid down under the Act. The computation of the income will be undertaken as per the manner which is laid down under the Act. Supposingly, the foreign company has a business income, then the business income of this foreign company will be computed under the Act. Now, while calculating the business income, you also will be giving the depreciation allowance, and for depreciation allowance we require opening WDV. On the opening WDV we apply the rate of depreciation. Now, how to get the opening WDV? Because up till the last year, the foreign company was assessable in their own jurisdiction, not in India. So what will be the WDV that we will take? Simple. CBD has said that if the foreign company was taxed or was assessed in its country for tax purpose, then whatever is the closing WDV as per their tax law will become the opening WDV as on 1st of April 2021. That is point number 1. So whatever is the closing WDV as per the tax law of the foreign company in their respective country will become the opening WDV under this Act. Point number 2, in this context, students, supposingly in this scenario, students, the brought forward losses, the foreign company has got a brought forward losses, students. Now, whenever you always deal with this, please pay attention. Now, the fact that the world income is taxable under the Act, so whether it is WDV or whether it is a brought forward business loss, what did I told you? In the current year, when the foreign company has become a resident in India, its world income will be taxable. And if the world income is taxable, then in that particular case, it will be taxable in the manner which is laid down under the Act. Now, while computing the total income, we also have to give the adjustment of the set-off of the brought forward business loss. Now, up till now, students, the brought forward business loss we were not having as per the Act. The brought forward would not be, the brought forward business loss was not there as per the Act. Whatever was the business loss that they were computing it as per their own tax laws. So what we need to do? Should we consider their brought forward business loss, or shall we compute their business loss as per the income tax law? Shall we recompute those losses as per the income tax law? This will be a mountain task. Students, if you have to recompute these business loss or recompute this WDV as per your income tax law. So what they simply say in this particular case is that You simply take up whatever is the disclosure that they have given on the WDV, on the business loss for the tax purpose in their country. Please pick it up that directly and accordingly consider it while computing your total income. There is another challenge, students. Say for example, for WDV we require 1st April WDV. We require WDV of 1st April, but chances are very high that they may have the financial statement prepared for tax purpose or otherwise which ends on 31st of December. But we require this data as on 1st of April. This is a real challenge then. Students. If this is the case, then what is the option now that we have? Now in that case, you have to check what is the difference. Is the difference which is 1st April and 31st of December, which is the last data available? If the difference is not more than 6 months, then in that particular case, we will tell the foreign company to prepare a financial statement and stretch it beyond 12 months up to 31st of March. So in this particular example, the fact that their last statement would have ended on 31st December 20, their last statement, students, would have ended on 31st December 2020. But we require the opening WDV on 1st April 2021. So in that case, there is a gap of Jan, Feb and March. 3 months is there. So accordingly, what is that we are going to tell to this particular foreign company? We will going to tell this foreign company to stretch it till 15 months. Another 3 months they need to stretch it up. Another 3 months should be stretched it up. This is what I'll suggest to all of you. Sachin, see, this is, even though you have listened it and you have understood it, a day before examination, even though you may skip it, you will still write the same answer. But the point is that at least you should have gone through it once. But if you have not gone through it at all, then you will not be in a position to write anything of it, isn't it? So just only suggestion, students. Many students skip this transitional provision. And why they skip this transitional provision? They think that now, sir, this is not applicable. On the contrary, students, every year it is applicable. And why I say so? Do you know why I am saying so? Because foreign company, all the foreign company at one point of time may become the resident in India for the first time. And because they may become a resident in India for the first time, this issue always will persist. Which issue? This issue. And this issue is essentially about that all the data is that of the earlier year. Now in this year, for the very first time in my life, I have become a resident in India. What to do? So at that time, the CBT guidelines is the key for us. Okay, always listen to this one, friends, and maybe even though you don't revise it on the day of the examination, still fine. But at least listen this one because it will facilitate to all of you to write the answers properly, correctly. So in my example, students, I require the opening WDV on 1st of April, but their last financial statement was up till 31st December. So what I will tell to them that please stretch your financial statement up to 15 months. Please stretch your financial statement up to 15 months, and only in that particular case, when you have stretched your financial statements up to 15 months, I will get my opening WDV as on 1st of April. I will get my opening WDV as on 1st of April. I hope that this point is very clear to all of you. But somebody says, sir, but what if the difference is more than 6 months? Then in this example, you said it fine, that the last financial statement ending available with us was as on 31st of December. So the difference was not more than 3 months. So we told them to stretch it up till 15 months. But what if, say for example, the last financial statement available was, say, 30th of June 2010. The last financial statement available for tax purpose was 30th of June 2010. And the next financial statement would be available on 30th June 2021. But we require the WDV as on 1st April 2021. Opening WDV on 1st April 2021. So how do we work it out this particular case? So the last financial statement which is available was on 30th of June 2020. The difference from 30th June 2020 till 31st March 2021 is 9 months. is 9 months. In that particular case, students, Ayush, the playlist is already there. If you see this particular description box, the details is already there. See the description box of this video, and if you can see this playlist of all the videos, please do ensure to like this particular video also. So 2 videos are done, friends. Again, I'm repeating, these revision lectures we are doing on Saturday and Sunday. Every Saturday and Sunday we are doing the revision lectures. Although today on Sunday I have not done yesterday, so Sunday I'm doing 2, morning and evening. Today I'm doing 2 lectures. In the evening would be at 5 o'clock. But every Saturday and Sunday we are having marathon session, Saturday evening and Sunday morning onwards. DT will get over in 44 hours. Is that clear to all of you? And if you have liked this proposition, do like this video also. Secondly, anyone who are looking for the charts, I'm just telling you the charts. You can contact to the bookstore, students, and the bookstore, as you all are aware, the bookstore number I can just give you, WhatsApp them, and you can opt in the charts. Okay, you can WhatsApp them and you can opt in the chart. So this is the bookstore number. So store number which is there, where you can bookstore number, you can order your charts. Okay, fine. Is that clear to all of you? In the description box, students, the link has been given. I have told to all of you now. I hope that this point is clear to all of you. So what did I told you, students, now in this regard? I have told to all of you, Ayush, I have told you that if supposingly my last particular accounting period preceding the date of transfer, my last particular financial statement has ended for tax purpose. Means the foreign company's last financial statement has ended for tax purpose on 30th of June 2020. Then in that case, the difference from 30th June 2020 to 31st March 2021 is more than 6 months, and accordingly you will then tell the foreign company to prepare what, students? To prepare a new set of financial statement for this 9 months period, a new set of financial statement for 9 months period, and by virtue of which, students, in this case they will prepare the financial statement for this 9 months period. Is that clear to all of you? Pravina may not be required. So in this case, they will prepare the financial statement for 9 months. I hope that every one of you are clear. For the last time I am repeating this point. Students, for the last time I am repeating this point, that even if the foreign company is a tax resident in India, the total income of the foreign company will be taxable at the rate of 40%, because the residential status is applicable, or the relevancy. The residential status is meant only for determining the scope of the total income chargeable to tax under the Act. The residential status is relevant only for determining the scope of the total income chargeable to tax under the Act. The actual tax rate is based on, students, is based on what? The actual tax rate, students, is based on whether the company is a resident or a non-resident. Students. With that, now we enter into the next part, and that is, as you all are aware, section number 9, students. With the residential status is done, we now enter into section number 9. Now, students, be careful about this one. Now, I am again telling to all of you, students, that I strongly feel that you will get the question in the examination. I strongly feel that you will get a question in the examination of a residential status of an individual. But if they give you a residential status of an individual, it will not only be for residential status of individual. ICI is so smart, students. ICI is so smart that the residential status of the individual, they will stretch up till its total income. Now let me ask you a question over here to all of you. Students, supposingly by virtue of the residential status test, by virtue of the residential status test if the individual becomes a non-resident. By virtue of the residential status test, if the individual becomes a non-resident. Okay. So this is an individual who has become a non-resident, and this individual has got some income which is accrued or deemed to accrue in India, and or the income which is received in India. This particular individual has got income which is accrued or deemed to have accrued or arise in India, or the income which is received in India. Now you tell me. So see the combination of questions, students. Be careful how these people is going to target. Now the focus has to be exam. The focus has to be the exam, and your mind should be very clear as to what these people are going to do about this data. So always channelize your mind as to how the ICI is going to target these questions. So question would be like, there is an individual. Okay. Now this individual, primarily the question that I'm telling you, these people are smart for doing this only. These people are smart to do only these things. So here is a case of an individual. Now they will tell you the individual. So you will be told about section 6 residential status, and as per section 6 he may become a non-resident or he may become a resident. If he is a non-resident, students, if he is a non-resident, then in that particular case the non-resident has got a special income, some special income which is charged to special rate, and then there is a balance income. Okay, so this is the Indian income. The Indian income that he has got, the non-resident, comprises of the special income at special rate and the balance income. Now you tell me one thing, if they are going with the alternate tax regime. First of all, tell me one thing, whether the alternate tax regime under 115 BAC, which is for individual, is it applicable? You just have 115 BAC you are doing right now? No. This is the interlinking that you should expect in the examination. ICA will do this, and that is the reason why mentally be prepared how the questions will be there. Tell me quickly, friends. If you are an individual, non-resident, then whether the alternate tax regime under 115 BAC, is it applicable or not? Under section 115 BAC, will it be applicable or not, students? Tell me this one quickly. Is it applicable? What is your take, students, on this particular point? An individual who is a non-resident, whether the alternate tax regime of 115 BAC, is it applicable or not? Quickly, students. Last 10 seconds now. NRI? No, don't use the word NRI, Shana. Non-resident. Use the word only non-resident. Don't use the word because, and when you talk about NRI, then you are talking about chapter 12A. Remember there is a chapter 12A which is there, a special chapter only for the NRI. Isn't it? That is what it is. So students, always keep in mind this particular thing. It is applicable, Sachin. It is applicable in this particular context. So whether it is applicable, answer is yes. And if it is applicable, students, be careful. The special rate would be the special rate on special income. And what about on this one? The balance income would be the special rate. I've written about, students. I've written about those who cannot read it. I've written about special rate on special income. And balance income at the new slab rate. On the new slab rate. Are you aware of the new slab rate, students? What is the new slab rate which is there? There is 2.5 lakhs increase. I think all of you are aware of it now. There's a 2.5 lakh increase which is there. I hope that every one of you are aware of this particular 2.5 lakh increase, isn't it? So that is what it is. There is a 2.5 lakh increase up to 15 lakhs, and thereafter, after 15 lakhs, it is all 30%. So that is what it is. But this is how you will expect the question in the examination. Apart from that, say for example, they will also tell you that look, this particular non-resident who is having Indian income, that Indian income is, say, salary income. That Indian income, students, is, say, salary income. So if they have got a salary income, then in that situation, will the salary income which is taxable in India, will the salary income which is taxable in India, will it be eligible for standard deduction? Will the salary income which is taxable in India, will it be eligible for a standard deduction? Do you get standard deduction when you opt for 115BAC? The standard deduction under the salary? The standard deduction under the salary? Do you get that standard deduction, students, under the salary if you are opting for 115BAC? To that the answer is no. You don't get the standard deduction. Always keep this particular point in mind. So students, now we will say this. There is a non-resident and then there is a resident, students. There is a non-resident and then there is a resident, students. Keep this point in mind. If you are a resident, students, please pay attention. If this individual resident, what kind of question you can expect then? If through a resident, they will ask you residential status. They will ask you residential status, and the question that they will definitely will ask would be about the section 90 and 91, the foreign tax credit. The foreign tax credit, primarily the foreign tax credit which will be there. Apart from some basic computation, students, they will definitely will target the foreign tax credit of 1991. So the question they will ask is like this. They will ask you, they will give you the data which will require you to compute the residential status of that individual, which will require you to compute the residential status of the individual. And after that what happens? After that, they will also require you to calculate the foreign tax credit. They will also require you to calculate the foreign tax credit. That foreign tax credit that you have to calculate under section 90 and 91. That foreign tax credit that you have to calculate under section 90 and 91. I hope that every one of you are now mentally prepared to face your examination. Are you mentally prepared to face the examination? Are you excited? Excitement, sir, is not there, but yes, we are mentally prepared. If the NRI has chosen for this, yes, why not? Because that is only for special rate. Sachin, that is only for the special rate. So those income, investment income and the LTCG income, which will be as per the special rate of the NRI chapter of 12A, and the balance income will be under here. And the balance income will be under here. Is that clear to all of you? Now, if you all are clear, let's look upon to this particular concept. Quickly, students. Section 911. Are you aware of that, students? Section 911, students. Income deemed to accrue or rise in India. Let's look upon to this. As per section 911, an income is deemed to accrue or rise in India primarily if it is out of a business connection in India, or if it is out of an asset or a property or a source of income in India. Asset, property or source of income in India, or if it is out of transfer of capital asset situated in India, or if it is transfer of capital asset situated in India. This is a railway. Remember, in the railway station also, this is the kind of the announcement that they make, the train announcement. Or if it is transfer of capital asset situated in India. Like that. And then remember that I'm rhyming like the announcement which are done in the railway stations. Isn't it, students? Have you heard of those announcements? When then you visited last to the railway station? If not soon, then immediately after the examination, students, plan a trip. After the examination, plan a trip. and do visit not railway station to your native place also. And do the journey from train, students. Will be a fun. Okay. And after that, do tell me your experience. So students, coming back to this particular part now. So section 911, income deemed to accrue or rise in India, whether directly or indirectly, through or from the business connection. So business connection in India, or asset, property, or a source of income in India, or last one is transfer of capital asset which is situated in India. So in these cases, whatever is the income which is earned by the non-resident, those income will be considered to be an income which is deemed to accrue as in India. Now students, as we can see that in the examination, there is a heavy dependency on this and this, A and B. Chances are very high that you may also get in May 22 attempt one of the two. Either it can be through a business connection, or they may target you the transfer of a capital asset situated in India. This can be one of the two particular questions that they may be targeting in the examination. Are you aware of that? This may be one of the two questions, students, that they may be targeting in the examination. Be very clear of this one. You should not have any confusion whatsoever. So one of the two is expected in the exam. One of the two is expected in the examination, students. Now in that particular context, students, in that particular context, how we will have to discuss in this regard. Please pay attention, students, all of you. But before that, just remember this. Don't forget this particular part as well. See, a non-resident is giving you oil rig. Just a typical case. You have to be mentally be ready. They are giving you the oil rig, and oil rig has been used, students, where in the territorial water of India. Some assets are being used in the territorial water of India. Which asset? Those assets which are given to you on hire by the non-resident, and for that purpose you are paying them the hire charges. Or maybe EZ also. Even EZ is covered, students. Even EZ. So those oil rigs that we find which are used in the EZ, those oil rigs which are being given to you by the non-resident, so that is given to you on hire. You are paying them the hire charge. Whether the hire charges that you are paying, is it an income of a non-resident which is deemed to accrue or rise in India? And the answer is yes, because we will say that it is in respect of an asset or a property or a source of income which is situated in India. And India, students, please be aware, for income tax law, India extends to EZ. So if India extends to EZ, we will say that these particular assets are being used in the EZ, and accordingly it is used in India, and hence any higher charges which are paid by the Indian company to the non-resident, this higher charges will be an income of the non-resident which is deemed to accrue or rise in India. These higher charges will be an income which is deemed to accrue or rise in India. That is the point in which it has to be considered. Apart from that, students, now let's look upon to the business connection. What is the case for a business connection, students? Now, students, here always keep in mind the definition of business connection that they've given is two. The definition of the business connection, can you see that? Student, the definition of the business connection that has been given in this context, it either includes or it either excludes. So it includes something or it excludes something. The definition of the business connection, students, it either includes something or it either excludes something. So what is this include and exclude that takes place over here? Let's check it out, the exclusion part first. The business connection exclude what? Exclude the operation which are confined. Please use this word in the examination, students. Very important. You need to use these words that they have used in this regard. Like the businesses, the operations are confined to the purchase. So if a non-resident is purchasing the goods in India and immediately exporting the goods thereafter, then in that case it will not be considered as a business connection of the non-resident in India. But if after purchase, if they do any other activity in India, even if that activity may be very small activity, but if after purchase in India. If they do any other activity in India, then the benefit of the exclusion will not be available. And if the benefit is not available, it will then lead to, or it will then constitute a business connection in India. If the benefit is not available, then it will then constitute a business connection in India. I hope that every one of you are clear with this one. Now going to the next particular part, students, it is what? Business of running a news agency or publishing a newspaper. Students, business of running a news agency or publishing a newspaper, students. Isn't it? So if you see over here in this context, if you see over here business of running a news agency or publishing a newspaper, if the activity is confining of collecting the news from India, like for example this current crisis of Ukraine and all, which is happening now, because India is close to both the countries, so therefore there can be a lot of foreign correspondents which may be in India primarily to get those very inside news, whatever it be. So in that situation, students, they are in India to collect the news from India to be transmitted in their particular respective channels. So in that situation, students, will the any income of that TV channel, the non-resident TV channel, any income of that non-resident TV channel, will it be considered to be an income which is accrued or deemed to accrue in India? And the answer is no. And the answer is no, students. This is also important. These are important points, students. They are asking these cases in the question. If supposedly, students, there is a cinema film, the many shooting location is in India, and in that particular case, if that particular foreign feature film production, the foreign film production house, if they happen to be an individual who is that producer, then that individual should not be a citizen of India. If that foreign film production firm, if that foreign film production is a firm that no partner in that firm, no partner students in that firm should be either a citizen or resident in India. Finally, if that particular foreign film production is a company, then no shareholder in that company should be a citizen or resident in India. So in that case, students, as you all are aware, in that case, if the activity is confined to, means is restricted to what? Restricted to, in this particular case, students, if it is restricted to the activities of shooting the cinema films in India, in the case of the non-resident, then in that case, in that particular case, there is no business connection so far as that foreign film production company or a firm or an individual is concerned. And the last one, students, is this. This they have targeted in the examination. I think many of you are aware that the non-resident is a foreign company, and that foreign company, students, what they are doing, they are engaged in the business of mining of diamonds. In that examination, students, I think many of you will be aware, they have given you the data, they have told you that this foreign company is a merchant, he is not in the business of mining of diamonds, but he is a merchant trader of diamonds. And what he is doing, he is in the activity which is confined to display of the uncut or unassorted diamonds in the special zone. So students, tell me one thing, this exclusion is for whom? For the miner, M-I-N-E-R, is it for the miner, or is it for students, in this case, is it for the merchant trader? It is restricted only to those who are in the mining work. Students. So in the examination, these people have talked about what, students? They have talked about the merchant trader. Please don't give the benefit of exclusion to merchant trader. If merchant trader will be doing this activity, then the benefit of exclusion will not be available, and that non-resident who is a merchant trader, for them there is a business connection in India, and accordingly whatever is the income arising out of the business connection in India will be deemed to accrue as in India. Now students, quickly read what business connection includes what? Students, this is important now. You can expect in this context this particular question. Students, please do read this 3 box. Box 1, box 2 and box 3. Quickly students, and box 1 only up till here. Quickly read this one. Quickly students. Once you read, students, just let me know quickly. I'll give you 30 seconds time. 30 seconds, you should be in a position to finish it off. Yes, Sachin, you're correct. Coming to this one now, students. All these inclusion, students, is for agent connection. This is for whom? For the agent who is wholly, Amrita, who is wholly or partly, wholly or majorly, students, wholly or majorly doing any of the following activity. Doing what? Any one, I'm writing about, students, doing any one of the following 3 activities. In a simple word, I'm just writing any one of the following 3 activities. So which are those activities that they are doing it? Which are those activities, students, that they are doing it? And as you can see herein, students, herein, what they are suggesting? The activities can be in this regard, students. The activities can be 1. Playing a principal role. The first activity, students, this one, where they are playing a principal role which is leading to the conclusion of the contract. Please use the phrase correctly, and this should be distinguished with habitually concluding the contract. So students, please be very careful. So actual conclusion of the contract is irrelevant. Actual conclusion of the contract by the agent is irrelevant. Contract by the agent is irrelevant. What is important, students, is that he should have played a principal role. The agent should have played a principal role which has led to the conclusion of the contract. The agent should have played a principal role which has led to the conclusion of contract is what will give rise to the non-resident a business connection in India. Second is, what is activity number 2? In the case of activity number 2, students, the agent may not have herein the activity in this case. The activity in the case of point number 2 is that the agent is maintaining the stock of the goods. The agent is doing what? He is maintaining the stock of the goods which is to be delivered on behalf of the non-resident. So here is the agent in India. What is he doing? He is like the non-resident is giving the goods to him, and as and when the non-resident gives the instructions to this particular agent, the agent keeps dispatching the goods to all those locations based on the instruction of the non-resident. That is what this point number 2 is. And the last point, students, is that habitually they are securing the orders in India. Plus mainly or wholly for non-resident. So in this particular context, point number 3 says that here is a case of an agent who is habitually securing the order. That is what generally the agent does. And then once the order is secured, they just push it to the non-resident. Non-resident take it further. So students, if any one of the following three activities is performed by that agent who is wholly or mainly doing these activity for the non-resident, then yes, the non-resident will be considered to have a business connection in India. The non-resident will be considered to have a business connection in India. That exactly is a point. However, students, be careful on this one. Be careful on this one, students. Have a look to this particular point quickly. Have a look to this particular point quickly, students. Does not include a broker or a general commission agent or any other agent having independent status acting in the ordinary course of business. So here, like say for example, students, I am an agent in India. Okay. But look, don't expect me, you are a non-resident. Don't expect me that I am going to sell only your goods. No, that is your mistake. In my shop, apart from your goods, there are 10 other non-resident goods which are there in my shop. So your goods are also there. Along with that, there are 10 other particular non-resident whose goods are also there in my shop. The customer comes to my shop. He decides what he wants to. He decides what he wants to buy. I don't push for anyone's good. Let the customer decide whose goods he wants to buy. So tell me one thing. If you have got such person in India, so whether this kind of a presence of such person in India, this kind of a presence of such person in India, will it give rise to a business connection in India? Will it give rise to a business connection in India, students? What is your take? Answer is no. It will not give rise to a business connection in India, and that is what they are trying to say in this regard. That is what they are saying in this regard. It does not include this. Now students, this is a common sense that only that much of the portion, see, the non-resident has got a world income. Now there is a portion of income which is arising out of a business connection in India. So if there is a business connection in India, will you then tax the entire world income of the non-resident? Be mindful of the fact, students. Be mindful of the fact that the non-resident is not a, he's a non-resident. He's not a resident that you want to tax the world income. He is a non-resident. He is not a resident that you want to tax the world income. And therefore what? Therefore only that much portion of the income, which is attributable to the non-resident's business connection in India, only that much portion of the income will be considered as an income which is deemed to accrue rise in India. That much portion of the income which is considered as an income which is deemed to accrue or rise in India. Okay. How much portion? The portion which is attributable to the business connection in India, only that much of the portion will be deemed to accrue rise in India, and that's exactly what they're trying to tell to all of you. I hope that every one of you are clear to this particular point. If all of you are clear one. Now students, here there is one concept of significant economic presence which is there. I think many students have left it, which I think many of you have left it. Although we are yet to get, the ICR module has covered this one, the concept of significant economic presence. ICR module students have covered this one. But why it is not that important, although I will just tell you a bit of something so that at least this is there in your mind, because the MCQ question you don't know. MCQ question, students, you may not be aware, because they will ask you like this, that herein whether the business connection up till now, this is what the MCQ question will be there. Students, ensure one thing. In the MCQ question, do you know what they will ask you question? I'll tell you. And I am preparing the MCQ question this time for all of you. So be ready, students, what kind of question you can expect in the examination. Are you aware of that, student? Then, so the question would be like this: that whether the business connection in India, let me see, instant coffee, you prepare instant coffee, students? I hope that morning instant coffee also you would have had it. So instant MCQ is prepared for all of you. Business connection in India. Tell me one thing herein. Business connection in India, because of the agent who is what? Wholly or partly, wholly or mainly concluding the contracts. Habitually concluding the contracts in India. This is one. Okay. There is a significant economic presence of the NR in India. Okay. Point number 3 would be, please be careful now. Point number 3 would be primarily say operations confined to purchase for export, and one more point they will give which is incorrect. I am not writing the fourth one, but one more point that they will give you to incorrect point. This is what they will say. Out of the 4 you have to choose which is the correct one. Primarily. So business connection in India, they will give you say 4 points. Fine. What are the 4 points? Primarily, agent who is wholly or mainly concluding the contracts. Second one is the significant economic presence of the non-resident in India, SEP in India. So what constitute a business connection in India will be your MCQ. What constitute your business connection in India will be your MCQ. Third one is the operation which is confined to purchase for the purpose of export. Just now we have discussed that. And fourth point, you will say, sir, what is fourth point? Fourth point is one incorrect sentence. So they will ask you, what constitute business connection of the non-resident in India? What give rise to the business connection of the non-resident in India? What give rise to that? Quickly, students. Anyone? Just 10 seconds, students, now. Only 10 seconds. If you all are ready. And if you like this question, you also need to like this video also. And please share to your friends, students, wherever you can do it. In this context, this is one of the effort is going, students, to take these lectures and all. And I would wish to have the reach to maximum of the audience to really take it through, so that they all get benefited out of this very important revision session which I am doing it in English. What I have asked is that in this, out of the 4 option, under which option you are having a business connection in India? You means the non-resident. Under which option the NR is having a business connection in India? Amruta, Vyati, and that exactly is the game. Under which option the non-resident is having a business connection in India? Praveena. Last 5 seconds. And the answer to that is, I think, students, if you all allow me, I become the examiner for your attempt. On your permission, students. Sachin, the answer is the business connection will be out of the first 2 is the correct option. The correct option is the first 2 point. SEP, the significant economic presence of the non-resident in India, will also now give rise to a business connection in India. A significant economic presence of a non-resident in India will also give rise to a business connection in India. This is the game that the ICI wants to play in the examination. So therefore, people are just knowing that, yeah, there is some significant economic presence, but they don't know the stretch which is there in this SCP concept. SCP, students, As I told you, just have a look over here. SEP students. Yes, Sachin. SEP, can you see that? SEP is where a business connection is established by reason of significant economic presence. Can you see that? By reason of the significant economic presence. So SEP also give rise to, SEP will also give rise to a business connection in India. Keep this statement in mind and you will see through your examination. I hope that all of you are clear with this one now. But you'll say, sir, but what is SEP? At least tell us briefly. Yes, I'll tell you briefly, students. Although I must also say that nothing will come in the SEP in the practical way because they are yet to notify the numbers and all. Many non-resident students, they have known, at least now in the corona time, these people have become very smart. They know that now they need, people have become tax savvy students. People have become tech savvy. All of you are aware. Now because corona was such an epidemic that it has made a big facilitation. People have, everyone has become tech savvy. So I want a goods from a departmental store in London. I want a goods from a departmental store in London. Do you know what I can do? I can log into their website, select the goods, pay it through the cartel, and they will dispatch it to me. That is what they will do. That is what they will do. So what happens? The London departmental store may not have any physical presence in India. They don't have any physical presence in India. But just like me, there are 1 crore people who are buying these goods from the website of this particular departmental store. So this departmental store may not have any physical presence in India, but do they have a significant economic presence in India? Answer is yes, they do have. They have a significant economic presence. So without having a physical presence, they do have a significant economic presence. Whether such significant economic presence will that give rise to a business connection in India? Whether this significant economic presence will this give rise to a business connection in India? Answer is yes, students. But you'll say, sir, but how much user, how much value that will establish a significant economic presence of that non-resident in India? That is what the law is silent presently. So unless that is given, we will not know how to apply it. But therefore, this SCP concept is to be read only in a very limited way, students, for your examination. And that limited way is that you need to address this SCP concept for MCQs. For MCQs, you will do it. Can you write one sentence, students, just in your notebook? Can you write a sentence in your notebook? As per the amendment, effective from assessment year 22-23. Write one note. As per the amendment, effective from assessment year 22-23, comma, if a non-resident students does not have any physical presence in India, but has a significant economic presence in India, then even that will give rise to a business connection in India. So what you have written? If a non-resident does not have any physical presence in India but has a significant economic presence in India, then even that will give rise to a business connection in India. Even that will give rise to a business connection in India. I hope that every one of you are clear with this one. Are you now eligible to face the examination with full confidence? Confidence, students. Confidence. Let's take the discussion further now. Let's take the discussion further. And I'm now coming to the indirect transfer, the infamous Vodafone, students. I think all of you are aware of it. The infamous Vodafone case, students. Are you all aware of it? Yes. Obviously, students, I will just explain you a bit of through a diagram before we really go for our launch. The Vodafone scenario, students, this is also a highly expected question. The beauty of this chart, students, is that in the chart, students, you will find I have also kept some selected questions. You'll say, sir, where is the selected question? I can show you. One question was already there in residual status. Can you see that, students? The chart has been made such that some few important selected questions, which obviously you will not have it normally, those questions are being kept over here. Like for example here, on indirect transfer, I have kept it over here. Are you clear with this one? So some of the important question of NR and all, I've kept it in the chart so that you can definitely, like, these are the foreign tax credit calculations which are being there. So that way, students, it will help you some practical reference if required. If required at the time of final revision, at the time of revision, students, this is definitely going to help to you big time. This is definitely going to help you big time, students. Now coming to the indirect transfer, Vodafone scenario. Students, those who are wondering from where the chart needs to be obtained, again, students, don't put it in the message. The bookstore number, I'm just giving it to you. The bookstore number, you can WhatsApp and you can get this chart. I'm just putting a here in the number of the bookstore. Please do it them. In this case, they will WhatsApp them and they will send it across to you. Let's do the indirect transfer. Very important for your examination. Is this indirect transfer? Many students are asking, sir, how likely indirect transfer question will be for your May 22 attempt? Extremely important. Highly important, students. Basic, students, every one of you are aware, but since many students are there, so I can just very quickly, for the benefit of the larger audience, I'm just revising the basic quickly before I launch the big one. Students, here in supposingly xinc.usa, if xinc.usa, if they are purchasing what? Purchasing the shares of the RIL. They are purchasing what? The shares of your RIL. And thereafter, they have purchased, say, rupees 100 per share. They have purchased for 100 per share. And thereafter, students, they are transferring, subsequently, point number 2, they are transferring the shares of the RIL. Transferring the shares of the RIL. So therefore, the question to all of you is, at what price? Many students are asking, sir, what price? It is 250 per share. 250 per share. Students, in that particular case, what about the capital gains? The capital gain is rupees 150 per share. In this case, the capital gain is 150 per share. Will this capital gains of 150 per share, will it be taxable in India? And the answer is yes. Now, please be very careful. Many students, this is known as, primarily, when you write like this, it really creates a lot of inconvenience in the examination. Students, this capital gain of rupees 150 per share is there. Don't use the concept of indirect transfer over here, because here xinc.usa, who is a non-resident or a foreign company, has transferred a asset which is the shares of the RIL which is situated in India. xinc.non-resident or a foreign company has transferred an asset. Which asset? The shares of the RIL. Where the shares of RIL is situated? The shares of RIL is situated where the company is incorporated, and the company is incorporated in India, and hence we can say that xinc.students will be xinc.students has transferred a shares which is has transferred an asset which is situated in India, in which case what, students? The capital gains is deemed to accrue rise in India. the capital gains is deemed to accrue or arise in India. Deemed to accrue or arise in India. Or arise in India. I hope that all of you are clear with this one. The capital gain is deemed to accrue or arise in India. All of you are clear with this part, students. The capital gain is deemed to accrue or arise in India. Why? Because the non-resident or the foreign company has transferred shares, has transferred an asset which is situated in India. Simple as that. Now, in the indirect transfer, students, what could be the question that you should expect? This is a simple thing. This is a case of a direct transfer. Students, this is a case of what? This is a case of a direct transfer. What is this indirect transfer then? The indirect transfer in the examination, students, two things are there. First of all, you need to identify the questions correctly. First of all, you need to identify the question correctly. And second point, students, is please write this. Only one provision you need to write it correctly, students. Only one provision. Please write it properly, because the chances are very high that you may write this provision incorrectly. Students, gone. They will not give you marks. So just let's be careful what exactly it is. Before we start building up the provision, I'll just give you this particular example again. So the example goes like this, students, that supposingly over here, there is this USA, a foreign company. USA, a foreign company. Now this XINC.USA, what these people have done, do you know, students, what they have done? They have set up a company in between ZPLC Singapore. They have set up a company in between ZPLC in Singapore. Ayush, ZPLC Singapore. This will also be covered in the revision class. Don't worry. In this entire revision class, these amendments also will be covered. Everything will be covered. Just now I did SAP for all of you. That was an amendment, isn't it? So in the revision class, everything will be covered. Amendment lectures I have done separately. That is different thing. But I am covering everything in the revision class. And now comes India, students. Now see, XINC dot very intelligently, students. XINC dot very intelligently, they have set up a company in between, and through this company ZPLC, they want to invest in the shares of RIL. Through that company in between, they want to invest in the shares of the RIL. So this is what they have done. So they have put up a huge money in this particular company, which is ZPLC. A huge money, students, has been put up over here. And accordingly, students, what they have done? Now, many students are asking, sir, this class will go up till when? This class, students, will go up till 12:30, 1 o'clock. Okay. Point number 1. Point number 2. Please note this point. Point number 2. You will say, sir, but when you will give us a break also? Will you give a break? Break of 10 minutes will be given. When it will be given? After I am done with indirect transfer, after I am done with salary and dividend income. Okay. Because the next part is the interest, royalty and FTS. I want your mind to be very fresh when I do interest, royalty and FTS. That is the game for me. Interest, royalty and FTS. Okay. That time, just before I start with interest, royalty and FTS, I'll give you 5 minutes break, 10 minutes break. Okay. So it should be not portrayed that you are a villain. So at least I give you 5-10 minutes break. So that time I'll give you a break, and then we will again move to the interest, royalty and FTS. This is the most important part. And after that, I'm going to move to the double taxation relief. The double taxation relief. So then you will say, sir, what you will do in the evening then? 5 o'clock in the evening? In the evening, students, the double taxation relief will complete, equalization levy will complete, and we'll start with the transfer pricing. Transfer pricing, I intend to cover in the evening 5 to 9. In the evening 5 to 9, I need to cover what, students? I need to cover up till the methods of the transfer pricing. So up till the methods of the transfer pricing, by evening we will be done. Okay. By next Saturday class, entire non-resident and transfer pricing, next Saturday class, everything will be through, including the theory portion. Students, congratulations to all of you. Including the theory portion will be done by next Saturday, Sunday. After that, the next Sunday class that people are asking, sir, what you will do in the next Sunday class? That I am going to do with the trust taxation. After that, the alternate tax regime, TDS, TCS, MAT is the topic which is going to be targeted, and that exactly how then the capital gains. This is how the flow will go. Is that clear to all of you students? Are you excited? Students, now then, in this context, the share capital, and the lectures are only on Saturday and Sunday. I'm again telling to all of you. This Sunday I'm doing in the evening, because yesterday I could not take it. But otherwise it's only Saturday and Sunday class. Saturday is 5 to 9, Sunday is 7 to 12:31. Okay, every Saturday and Sunday, block your time, block your dates for these things. You'll say, but it will go up till when? I think second or third week of March. Third week of March maximum, you'll be done. Third week of March, I suppose. We should be good to get it done on the weekend revision series. Now students, what these people have done students, in this case is that share capital, say for example, they have obviously now XINC dot very smartly students, what they have done students is that they have introduced the share capital in this so that they are the investor. So they become XINC dot is an investor. They have introduced a share capital, say share capital of say 100 crore. Okay, now in that case, there is a cash in bank of 100 crore. Now, of this cash in bank 100 crore, what this XIZ PLC has been given the mandate of what? Invest 80% in the shares of the RIL. Invest 80% in the shares of the RIL and balance say 20% in the foreign asset. Balance 20% where? In the foreign asset students. That is the mandate that was being given to them. Okay, based on that mandate, they have invested 80% in the shares of RIL and then balance 20% they have invested in the foreign assets. Now what has happened? Now be careful. With the shares of RIL students, as you all are aware, there is a growth rate of what? The growth rate is 40%. We all are aware. RIL share students in 2002, it was at 70 rupees. And in 2022, it is traded at 2,300 rupees. But I will say that don't expect then in that case in 2040, it would be 20,000 rupees. This is risky. So I cannot blindly recommend to all of you students, don't get carried away. Students, I'm telling you in life, in this case. So in this situation, growth rate 40% in this situation is there. So with the growth rate of 40% students, what will happen? The value of the shares will increase in the market. The value of the shares will increase in the market. Yes, the value will increase. Nobody can stop that. The value of the share students will increase in the market. And with the value of the shares increasing in the market students, what happens now in this context? The value, the fair market value, ripple effect, the fair market value of the investment also will increase of this ZPLC. The fair market value of the investment will also increase of this ZPLC. The fair market value of the investment increases of ZPLC. Accordingly, if my asset value increases in the market, don't you think that will have a ripple effect even on my share price in the market? Face value may be anything, but my share price in the market, will that also increase or not? The share price students, will it also increase or not? Answer is yes. If my value of the asset in the balance sheet, if that increases in the market, so will be my own share price in the market. Now, what XINC dot has done? XINC dot has taken the advantage, and now what it is doing, students, it is now transferring the shares of ZPLC to say YINC dot USA, say at in this case 250 per share. So here the purchase was at 100 per share. Now the sale is at 250 per share. So if the sale is at 250 per share, students, then the capital gain, How much is the capital gain? The capital gain, students, as you all know, is 150 per share. Whether the capital gains, will it be deemed to accrue rise in India? Now, what X INC dot will say that I have transferred the shares of, whose shares I have transferred? ZPLC. In the previous case study, I have transferred the shares of RIL. So when in the previous case, I have transferred the shares of RIL, you can accuse me that I have transferred an asset which is situated in India. But here, I am transferring the shares of ZPLC, where ZPLC is incorporated. Where ZPLC is incorporated, it is incorporated in Singapore. So therefore, X INC dot, the transferor of the shares of ZPLC, it is now saying that if my capital gains has to be taxed, then India, you lay off. India, you lay off. No tax would be paid in India. If my capital gains has to be taxed, it will be taxed in Singapore. It will be taxed in Singapore. This is what these people will say, that it will be taxed where? In Singapore. Do you agree to this one? And that is why this is the game which X INC dot has played, and that is the why we have the amendment in the form of explanation number 5 to section 911. Although this is the old amendment, but still the most important amendment for your upcoming May 2022. Now, what explanation 5? Now, students, please be very careful. You have to write only this provision carefully. And I am saying to all of you, only write this provision carefully in the examination. Rest of it, make the charts. Which charts? The charts which we have prepared over here. But this provision needs to be written extremely carefully. So, how this provision says, as per explanation number 5 to 911, where the shares of the foreign company, which foreign company? The foreign company whose shares you have transferred, that is ZPLC. Which foreign company, students? The foreign company whose shares you have transferred, where the shares of the foreign company derive its value. Now the keyword, substantially derive its value substantially from the Indian asset. From the Indian asset. What is the Indian asset in this example? RIL shares. Then the shares of such foreign company. The shares of such foreign company, again ZPLC, is deemed, this is important, is deemed to be situated in India. The shares of such foreign company is deemed to be situated in India. So what is that we are saying, students? Where the shares of the foreign company derive its value substantially from the Indian asset. Substantially from the Indian asset, which is in the bracket RIL shares, then the shares of such foreign company is deemed to be situated in India. Is deemed to be situated in India. Is that clear to all of you, students? Can you write this much, students, properly in the examination? If you can write this much properly in the examination, game is over, students. Rest of it, students, I am not concerned whether you can write this one or not. You can directly put up the boxes. I'll tell you what you do, but this you cannot afford to go wrong. If you go wrong over here, gone, students. Whatever hard work that you will do later on has got no reasons. If your structure of this sentence is wrong, then whatever you will do later on has got no relevance. I'm telling you and I'm warning to all of you. I know how they are checking the paper. The head examiner, students, is our student only. She is my 2007 batch student. Head examiner direct tax. How these people are checking, in fact, your paper, I understand this. So the moment the main provision itself is incorrect, later on they will give you only consolation prize for the right answer. Only a consolation prizes are given. Half marks, 1 marks. This is how these people check their paper. So you have to be extremely careful on this particular provision. So what you'll write, students, explanation to section 911, where the shares of the foreign company, visualize in the mind, you visualize the structure which is there in this question. It was a foreign company, the US company X INC dot. Instead of purchasing directly the shares of RIL, it has put up another company in between. Which is ZPLC Singapore. Now, this foreign company X INC dot has put up a company in between, and through that company, it is making the investment in the shares of the RIL. Now, accordingly, looking into the form, it appears that it is the foreign company ZPLC which is holding the shares of RIL, and because it is holding the shares of RIL, its own value of the shares has increased in the market. Because the RIL shares value increases in the market, ultimately it will impact ZPLC's own share value, and once the ZPLC's own share value will increase, thereafter the ultimate investor, the US based ultimate investor X INC dot, will transfer the shares of the Singapore ZPLC company, and by virtue of which they will get the gain. So what you are going to say, that the ZPLC, which is the foreign company, if it derive its own value, the ZPLC, which is the foreign company whose shares was being transferred by the non-resident, so whether that particular ZPLC, which is the foreign company, does it derive its own value substantially from the Indian asset? Does it derive its own value substantially from the Indian asset? If the answer is yes, then in that case, the shares of that foreign company, which is ZPLC, the shares of that particular foreign company, that is ZPLC, will be deemed to be situated in India. Is that clear? Now, what ultimately, finally, students, you need to only be cautious on one last thing. And what is the last thing, students, in this case? What is the last thing, students, in this case? The last thing, students, in this case is about what? The last thing is about what is substantial test. Be careful. What is substantial? So, in this context, students, keep in mind this particular part. Substantial test. So, two things. Substantially. So, in the case of substantial test, students, be careful. There are two boxes. You can write in the boxes. This box is about when to test. This box is about when to test this substantial test, and this box is about how to test. When you say when to test, it means what, students? When you say when to test, it means what? It means what is the specified date. So first of all, students, you have to freeze on which date you are going to test this substantial test. First of all, you need to freeze on which date you need to test the substantial test. Please freeze that date. There are only two dates, students. Date is either the date of transfer of the shares of that foreign company, that is ZPLC. Either you will take that date, or you will take the date of the accounting period which has ended before the date of transfer. So you will take up the last date of such accounting period. The accounting period which has ended before the date of transfer, you will take up then the last date of the accounting period. So the question is, which date you will take? Date of transfer or the last date of the accounting period which has ended before the transfer? That depends upon, between these two dates, whether the book value of the total asset of the foreign company, has it increased by more than 15%? Has it increased by more than 15%? If you say the answer is yes, sir, it is increased by more than 15%. It has increased by more than 15%, students. Then, students, we will say what? In this particular case, we shall say in this particular case, students, that If the book value of the asset as on the last day of the accounting period by 15%, if it has increased by more than 15%, then in that particular case, students, we shall say that the relevant date or the specified date on which you need to apply the substantial condition should be the date of transfer. If there increases by more than 15% in these two dates, then in that case you will take up the latest date. Which is the latest date? The latest date is the date of the transfer. The latest date, students, is the date of the transfer, and accordingly you will go with that date, and on that date you will then apply the substantial test. But you say, no sir, more than 15%, the total book value of the asset of the foreign company. Which foreign company? ZPLC, whose shares was transferred. So the total book value of the asset of that foreign country between these 2 days has not increased by more than 15%. Then in that case you will take up which data? The data of the last date of the accounting period preceding the date of transfer. The data of the last date of the accounting period preceding the date of transfer. That is what you are going to take. So that is what it is. So specified date is this. First is this. So when to check, you need to identify first. Maybe they may not give it to you this particular part, but they may also give it to you this particular part. It depends, students, we cannot say. But what is important is how to check. How do you check this substantial condition is the real game. So when to check, first you decide, and on that date, on that specified date, how do you check? So the how you need to check, students, now you have got, students, both. Please be very careful, or you have got both. What is both? That ZPLC, check it out, students, whether the fair market value, students, whether the fair market value of the assets, whether the fair market value of the Indian investment held by ZPLC as on the specified date is more than rupees 10 crores. Whether the fair market value of the Indian investment held by whom? Held by ZPLC as on the specified date, is it more than rupees 10 crores? So this value which is there, students, can you see this value? Which value? Here it is the fair market value. By the way, students, for specified date you will see the book value. For this one, students, you will see which date? You will see the fair market value. Can you see the difference? For the specified date you will see the book value. For the substantial condition you will see the fair market value. For the substantial condition, students, you will see the fair market value. So what is that you are going to see? Whether, students, again repeat, whether the fair market value of the Indian investment held by ZPLC. Who is ZPLC? ZPLC is the company whose shares was being transferred. So whether the Indian investment held by ZPLC as on specified date is more than 10 crores. By the way, the value should be the fair market value. Is it more than 10 crores? And second is the fair market value of the Indian investment held by ZPLC as on specified date. Is it minimum 50% of the total value is 50% of the total fair market value of all the assets of that ZPLC. So both absolute terms 10 crores, relative term 50%, both needs to be seen. So you have to see on the specified date whether the fair market value of the ZPLC, fair market value of the Indian investment held by ZPLC, is it more than rupees 10 crores? That is point number 1. And point number 2 is whether the fair market value of the Indian investment held by ZPLC, is it at least 50% of the total fair market value of its asset. If the answer is yes for both, if the answer is yes, then we will say that ZPLC, the foreign company whose shares were being transferred by the non-resident, we will say that the ZPLC derive its own value substantially from the Indian asset, and accordingly the shares of the ZPLC is deemed to be situated in India. And if that is the case, any non-resident selling my shares, any non-resident which is selling my shares will have an income which is deemed to accrue or rise in India, will have the income which is deemed to accrue or rise in India. Now there is one exception, students. I told you any non-resident selling my shares will have an income which is deemed to accrue as in India. Students, there is an exception on that part, and the exception, students, is that in the case of, this is an important one, minority shareholder. If the shareholder who has sold my share, who am I? I am ZPLC, whose value is substantially derived from the Indian asset, and therefore the location of my own shares is situated in India. So supposingly, if that transferor of my share happened to be a non-resident who is a minority shareholder. What is this minority shareholder? Meaning thereby, he does not own more than 5% voting power in me. That non-resident does not own more than 5% voting power in me. Then he or she will be considered to be a minority shareholder, in which very case the transfer made by a minority shareholder, will result into a capital gains, but will not be taxable under 911. It is not taxable in India. So minority shareholder is the only exception. So even if I, the foreign company whose shares is deemed to be situated in India because I am satisfying the substantial test, if my shares has been transferred by a minority shareholder, then the capital gain arising to such minority shareholder will not be deemed to accrue as in India. And who is the minority shareholder? Who does not own more than 5% of the total voting power in this company. Who does not have more than 5% of the voting power in me. In that particular case, this particular shareholder would be considered to be a minority shareholder. Is that clear to all of you? Last one point I will share with all of you, students, and that is about the fair market value. Students, we were talking about that the ZPLC, that is the company through whom XINC dot has made the investment in India. So this ZPLC, what we say is that whether the fair market value of the investment held by ZPLC as on the specified date, is it more than 10 crores? And whether the fair market value of the Indian investment held by ZPLC as on specified date, is it minimum 50% of my total fair market value asset? So here is the fair market value, students. I don't think they will target anything about the fair market value, but still I want you to be extremely cautious about how to calculate the fair market value. Students, fair market value, when they will tell you whatever is a corresponding liability that they will give it to you, that liability shall not be reduced. So whatever is the liability which has been given in this context, students, that will not be reduced. So here is one very important fact. We are not, and don't get into in the depth, just remember this concept. One question which is there over here, which I have given it to you about RIL Limited. So this question which I have given it to you about RIL Limited, students, in this context, the question that I have given it to you about this RIL Limited, which is a very important question. In this case also, if you see, when they were giving you the fair market value, can you see this one herein? So fair market value 180 and 20. So what did I told you? In this case, you will have to add the liability in this case. Yes, Sachin, you have to calculate the liability. So it has to be on a gross basis. So any liability, corresponding liability that they will give it to you, please do add it. This is how the fair market values are calculated. This is how a fair market value is calculated under the indirect transfer provision. Only for indirect transfer I'm talking about it. Only for indirect transfer, students, I'm talking about it. So that is how the fair market value is to be calculated. Any corresponding liability they will give it. Hello students. Students. So students, there are certain power failure which is there herein, and it has got just resumed. Unfortunately, many students would have. Okay. Students, have you all came back? In fact, the power has resumed herein. So students, in this particular context, what I will do is this, that students, in this regard, I'll just try to complete at least the basic thing on the royalty and technical services, students, because I think many of the students would have left it by now. So very quickly, so students, very quickly then, I'll just do a particular part because obviously students, we have to also have the target of completion. So I'll just deal with it, students, quickly. Few of the areas now. The few of the areas, students, I'm just going to deal with them quickly. So let's begin, students. In this particular context, I just want to do, students, up to royalty and FTS, so that in the evening session then the double taxation relief and all, I will be in a position to deal with it. So students, I'm coming back to this particular proposition. So students, what was discussion, the last discussion which I was having in the break was about the indirect transfer. I think we have done with this indirect transfer completely, students. We have done with the indirect transfer completely now in this regard, isn't it? So with that being done, we will now proceed further, students. With that being done, we will now proceed further. Now students, if you see very carefully, we have done with this expression 5. In that, again, I'm repeating this particular point to all of you. One important point which I'll discuss, and then we will move further. One last particular point we'll discuss, and then we will move further, students. And what exactly it is, let me in fact share with all of you. Students, consider this fact. All of you students, pay attention now. All of you students, those who have present, those who just have present, students, acknowledge their present, students. Who are there right now? Acknowledge. Vyati, Sachin, who are there presently? So students, I will be discussing primarily a limited particular area now, so that in the evening the session doesn't become heavy. So let's look upon to that angle now. Quickly, students. In this particular context, students, the point is this. If you see very carefully, students, supposingly this particular asset, students, this particular asset derive its value substantially from the ZPLC, the example which I was giving to all of you. The ZPLC derive its value substantially from the Indian asset. Let's take this particular part. Derive its value substantially from the Indian asset. And therefore, the location of Z PLC, that is the shares of that foreign company, is deemed to be situated in India. And this X INC dot, students, this X INC dot is said to have transferred the shares. This X INC dot, students, is said to have transferred the shares of whom? As you all are aware, this X INC dot is said to have transferred the shares of a asset, which is Z PLC shares, which is deemed to be situated in India. And accordingly, the capital gains arising on this transfer, will be deemed to accrue arise in India. The capital gains, students, which will be the capital gains that will be arising from such transfer will be deemed to accrue or arise in India. All of you agree to this one? Now, on this deemed accrual, students, let's have a look to this particular point. On this deemed accrual, students, let's have a look to this particular point. So, how to calculate the capital gains? How do we calculate the capital gains in the hands of X INC dot USA? So, please understand, students, for X INC dot USA, it is the shares that they have transferred is the shares of the foreign company Z PLC. Please tell me the shares which is the foreign company shares Z PLC, is it a listed shares in India or it is an unlisted shares in India? Tell me this first. Is it a listed shares in India or it is an unlisted shares in India? All of you will agree, students, that this is an unlisted shares in India. And because it is an unlisted shares in India, because obviously in India it is not listed, the shares of Z PLC, which is deemed to be situated in India, but the fact remains it is incorporated in Singapore, therefore it will not be listed in India. It's a foreign company, so therefore it is an unlisted shares and securities. So please pay attention now. A special provision I am now talking about it under 112. Students, a special provision I am talking about it under 112. What is the special provision? As per 112, students, now be very careful what it says. It says this, that as per 112, students, it says that any shares or securities, students, any shares or securities which is an unlisted shares transferred by unlisted shares, being a long-term capital asset, transferred by a non-resident or a foreign company, then in that particular case, the capital gains, the long-term capital gain or loss will be calculated under section 112. The long-term capital gain or loss will be calculated under section 112 without giving the benefit of indexation, and the tax rate that will be applied would be 10%. So again, I'm repeating, students, unlisted shares and security being a long-term capital asset. Can you tell me, students, how it can be considered to be a long-term capital asset? How the unlisted shares and security will be considered to be a long-term capital asset? It will be considered as a long-term capital asset if the period of holding is more than 24 months. If the period of holding, students, is more than 24 months, do you all agree to this one? So if the period of holding is more than 24 months, we will say that this particular unlisted shares and securities is a long-term capital asset. So therefore, we have to see X INC dot whether it has held the shares of Z PLC, for more than 24 months. If you say that yes sir, he has held the shares for more than 24 months, then congratulations, students, it will then be considered to be a long-term capital asset. And once it is considered as a long-term capital asset, students, what did I told you? Then the capital gains shall be computed. Without providing the benefit of indexation. The capital gains shall be computed without providing the benefit of indexation, and the tax rate that will be calculated on such long-term capital gains would be 10%. In that question are of RIL Limited, students. Just keep in mind that RIL Limited question which is there in this case, that RIL Limited students question that you can see is that RIL Limited question that you can see, students, is what? That RIL Limited question, students, that you can see is what, students? Indeed, in that RIL limited question, students, which has been there, that we have assumed to be an unlisted shares. That RIL limited question that you will see, it is assumed to be unlisted share, and accordingly see the period of holding of RIL shares in that question. See the period of holding when it was acquired, when that foreign company Barbara Inc. the USA company, when it acquired that shares and when it transferred that shares. See those particular, the period of when Barbara Inc. has acquired the shares of foreign company. Which foreign company? Whatever foreign company you will find, I think that is a Mauritius based company. If I'm not mistaken, if in that there is a Mauritius based company. So when they have acquired the shares of that Mauritius based company and when they have transferred the shares of that Mauritius based company, that Mauritius based company is deriving its value substantially from the Indian asset. So therefore the shares of the Mauritius company is deemed to be situated in India. Now the shares of the Mauritius company, is it unlisted in India? Answer is yes, unlisted in India. So check the period of holding of that US company Barbara Inc. which has transferred the Mauritius company shares whose value substantially derived from the Indian asset. So whether the period of holding of the US company in the shares of this Mauritius company, is it more than 24 months? If the answer is yes, then it will be considered to be a long-term capital asset. And if it is a long-term capital asset, students, as we all are aware that for non-resident or a foreign company transferring a long-term capital asset being an unlisted shares, what I have told you, as per 112, the capital gains will be calculated, the long-term capital gains will be calculated without providing for the indexation benefit, and the tax rate would be 10%. And the tax rate, students, would be 10%. I hope that every one of you are clear with this one. Now, on this note, students, we do this particular part. Section 912 and 3, salaries which is deemed to accrue as in India. Salaries which is deemed to accrue as in India. The next section, students. So when the salary income is deemed to accrue as in India, now students, there are some few exemption of section 10 which is important to be considered over here. By the way, before I can proceed further over here, students, before I can go to section 912, I just want to bring your attention to section 195. Students, I just want to bring your attention to section 195. Why it is important? If you remember, students, in my example of X-Inc. has transferred the shares of that ZPLC Singapore, X-Inc. students has transferred the shares of ZPLC Singapore. Can you tell me to whom they have transferred the shares of ZPLC Singapore? In my example, to whom that they have transferred the shares of ZPLC Singapore. So if you see very carefully in my example, I have told you that they have transferred the shares of ZPLC Singapore to whom? To YINC.USA. So XINC.USA is transferring the shares of the ZPLC Singapore to another non-resident based in USA, which is YINC. Now we have concluded. What is that we have concluded, students? We have concluded that the capital gains arising to XINC. is deemed to accrue arise in India because XINC. has transferred a asset being a shares of a foreign company which is deemed to be situated in India, being the shares of a foreign company which is deemed to be situated in India, and accordingly on this particular transfer, whatever is the capital gains which arises, accordingly on such transfer, whatever is the capital gains which arises, that capital gains, what is that we will say? That capital gains, students, will be deemed to accrue arise in India. That capital gains, students, we will say that capital gains will be deemed to accrue as in India. Now the question to all of you is whether the payer non-resident, which is YINC. Whether the payer non-resident, which is YINC. When they are making the payment in that example, whether they will be deducting the TDS under section 195. Whether the payer non-resident, which is YINC. When they are making the payment, will they be deducting the TDS under section 195, students? This is a very important part. I should tell you this part, that YINC. Which is paying the amount to XINC. Is also a non-resident. Second, this YINC. Does not have any physical presence in India. YINC. Does not have any place of business in India. YINC. Does not have any business connection in India. So this aspect you will not find so far as Y and C dot is concerned. So Y and C dot is making the payment to X and C dot. That X and C dot which is receiving this consideration primarily in lieu of transfer of the shares of a foreign company which is deemed to be situated in India. So therefore, on this particular payment made by Y and C dot, who is also a non-resident, whether they will be required to deduct the TDS, considering the fact that Y and C dot does not have any place of business, physical presence in India. That is the issue under consideration. So students, if you see section 195 over here in this particular chart, which is I think page number is page 45, in this context, have a look what it has to say. In the context of 195, it says that any person responsible for paying the interest or interest other than those in 194 LB, LC and LD and any other sum chargeable to tax, responsible for paying the interest or any other sum chargeable to tax to a non-corporate, non-resident or to a foreign company is liable to deduct the tax at source at the rate prescribed by the relevant Finance Act. At the rate prescribed by the relevant Finance Act. That is what they have mentioned. So any person is responsible for paying the interest or any other sum which is chargeable to tax to a non-corporate, non-resident or to a foreign company is liable to deduct the tax at source at the rate prescribed by the relevant Finance Act. Now here if you see students, payee to be a non-resident, payee to be a non-resident, we all know that the recipient has to be a non-resident for 195. But what about the payer? They are saying that the payer can be even a resident or a non-resident as the case may be. The payer, students, can be anyone. The payer can be either a resident or they also can be a non-resident as the case may be. Be very careful. Now, if you see it in this context, students, explanation number 2. Please have a look to this particular part. Students, so therefore, before you read this further, students, therefore, if you see the applicability, what is that we have to see? We have to see that whether the amount received by the non-resident payee or the foreign company, the payee being a foreign company or the payee being the non-resident, if they are the one who is receiving the amount, whether that particular sum is it chargeable to tax under the Act. Just now we have discussed and we have concluded that the payment which is made by Y and C dot to X and C dot, that payment we have concluded that this payment is chargeable to tax in the hands. This payment, students, is chargeable to tax in the hands of whom? In the hands of X and C dot, who is a recipient. X and C dot, who is the recipient. And if it is chargeable to tax in the hands of the recipient non-resident X and C dot, whether the payer non-resident Y and C dot, will they be required to deduct the TDS, considering the fact that the payer non-resident does not have any place of business, place of residence in India. For that reason, students, read this explanation number 2 quickly. This explanation number 2 is the key. So what it said, it clarifies that the obligation to comply with section 195(1) and to make deduction there under applies and shall deem to have always applied and extend and shall deem to have always extended to all person. The obligation to comply with section 195. On whom there is the obligation? On whom there is the obligation? On the payer. Okay, on the payer. Now, to all person, obligation on all person, resident or non-resident. So it doesn't matter whether the payer is a resident or non-resident. And next is whether or not the non-resident. And if the payer is a non-resident, then whether or not, it implies it is irrelevant whether the non-resident has a residence or a place of business or a business connection in India. It is also irrelevant that whether or not the non-resident has got any presence in any manner whatsoever in India. So only up till this 195 is relevant, students. So the bottom line, students, is this: be very careful. These people can be so intelligent in the examination that they can ask you a question, and that question could be, are you aware of that question, students? The question that they could say that whether the payer will be required to deduct the TDS. Now that will all depend upon whether the recipient payee, who is a non-resident, in their hands, whether that particular amount which is paid is it chargeable to tax under the Act? And how do we decide whether it is chargeable to tax under the Act? That decision is based on section number 9. That decision, students, is based on section number 9. Is that clear to all of you, students? And that is how the things has to be looked upon. So again, for the final time, if the amount is chargeable to tax in the hands of the non-resident recipient or in the hands of the foreign company recipient, and the amount which has been paid by the payer who is also a non-resident, question is whether that payer non-resident, is it required to deduct the TDS under 195? So what did we concluded just now? We concluded that if in the hands of the recipient non-resident, the payee non-resident, if that amount is chargeable to tax under the Act, then in the payer non-resident will be required to deduct the TDS irrespective of the payer non-resident will be required to deduct the TDS irrespective of the fact that the payer does not have any place of business or place of residence in India. The payer non-resident does not have any business connection with India. So the payer non-resident may not have any connection with India. Still, they will be required to deduct the TDS under 195 since the consideration which you have paid to the payee non-resident, the consideration that you have paid to the payee non-resident is chargeable to tax in their hands. With that, now students, I come to my next particular proposition about the salary which is deemed to accrue as in India. The salary, students, which has been there. So here, students, if you all will see the salary 912 and 913. The salary income which you can all see for 912 and 913 and what exactly it is. So the salary under 912 and 913 payable by any person who has earned in India. So salary which is earned in India by whom? Who has earned the salary? So the salary is earned by a person who has provided the services in India. The salary, students, has been earned. So income would be, so if a non-resident student is rendering the services in India, so whether the salary that he has received in respect of the services which he has rendered in India, will the salary be considered as an income deemed to accrue as in India? And the answer is yes. Apart from that, students, section 912 also enlarges the scope of the salary income of the non-resident to be taxed in India in respect of the leave period, salary which is immediately either preceding the service period in India or immediately succeeding the service period in India. So if there is a leave which has been taken immediately before the period of the services commencing in India or immediately after the leave period, immediately after the service period, if you are getting a leave for which the salary has been paid, then the salary so paid during that leave period, either immediately preceding or immediately succeeding the service period in India, then the salary so paid on such leave period will also be deemed to accrue as in India. The salary which is paid for such leave period will also be a salary which is deemed to accrue as in India. That is what 912 would be all about. Now there is an exemption that is there which is very important, and that is a short stay exemption which I am going to take you through just now. But before that, 913. Now students, this is again a very important part. And what does it say? It says that if supposedly the Indian government is making the payment of salary to its citizen, if the Indian government is making the payment to its of salary to its citizen rendering the services outside India, in that particular case, students, what we will say that the salary income of that particular citizen of India rendering the services outside India, so maybe because of the stay outside India, that citizen would become a non-resident, but the fact that it is receiving this particular salary from the government of India, that salary would always be deemed to accrue as in India. Okay. However, students, at the same time, you should keep in mind that there is an exemption under section 10(7), and that exemption under section 10(7) is about the allowances perquisite which has been paid or allowed outside India. allowances or perquisite which has been paid or allowed outside India. So this 10(7) exemption, students, is what primarily is there in this context. The 10(7) exemption is what is there in this particular context. I hope that every one of you are clear with this one. Fine, and this is exactly what it is there. So 10(7) exemption is in respect of this. So that exactly how the things has to be looked upon. Now, in this regard, students, the next particular point is about the dividend. The next particular point is about the dividend. Now the dividend, students, okay, before that, students, I'll just take you through the exemptions. The exemption on salary, very important exemptions are there, students. Now the section 10 list is huge. People get frightened, isn't it? Don't worry, students. Whatever markings which I'm going to give it to you, do only that. Whatever markings which I'm going to give it to you, you just do only that. So the markings are, students, here it is. Here we go. 10.66 and 10.62. Can you see that, students? This is the two important point, and the about 10.4D is also important. This is also important because there was an MCQ which was targeted on 10.4D. I think many students who would have done it, they will appreciate it. But let's, for the time being, discuss this one out. 10.66 and 10.62. Now, students, the MCQ, one of the MCQ which the ICF targeted is on this beautiful MCQ. So there is a, just now we discussed, students, that the government of India paying its citizen who is providing the services outside India, then the salary of that particular employee will be deemed to accrue as in India. That is what we have discussed. Take a reverse case. A foreign government students who has their employee staff, who has got their employee staff in the consulates in India. If they are making the payment of the salary to their diplomat or the foreign consulate staff, do you think in this case, students, in this case, the salary earned by this particular consulates or the diplomats, will this be taxable in India? And the answer is no. Just the way we have got 913, whereby the government of India making the payment of salary to its citizen of India who are providing the services outside India, we have said that the salary income of theirs will be deemed to accrue as in India. Same way, even the foreign government will exercise its right of taxability of the salary which they are giving it to whom? To these diplomats and the consulate employees. Even they will exercise the same particular power, and hence the Indian government should rightfully give an exemption on the salary income earned by these employees. They should rightfully give the exemption on the salary income earned by these employees. Do you all agree to this one? Answer is yes. And that exactly what you will find, students, over here under section 10.62. But what the ICI have told you is this: be careful. This exemption is applicable to an individual who should not be a citizen of India. This exemption is available only to that individual who is not a citizen of India. So the ICI MCQ was that there is a particular, in the foreign consulate, there was Mr. A who was a resident who was a citizen of India, and he was providing the services. Mr. A was a citizen of India and he was providing the services in that particular foreign consulate and the diplomatic mission. Mr. A also was a non-resident. That is what the question was suggesting to you. Mr. A was also a non-resident. So please tell me then, the foreign government making the payment of salary to Mr. A, who is a citizen of India and who is working in this diplomatic mission or foreign consulate. So the salary income given by the foreign government, will it qualify for this exemption? Answer is no. The exemption is only if that particular person is not a citizen of India. And that is the reason why now you will appreciate that in section 913 that we discussed, wherein the government of India is paying the salary to its citizen who is providing the services outside India. Citizen of India was key. Here also the citizen of that country will be the key. So that is what students 10.62 is all about. Students, 10.66 is about the short stay exemption. Very important exemption, short stay exemption. So therefore, supposingly the period of the services in India is for a very short period that they have came in India and provided their services. For a very short period that they have came in India and provide their services. Will be, students, in this particular case, will it be then? In this particular case, students, you have to tell, will it be then considered for the purpose of the taxability? If it is satisfying the condition of section 1066, answer is no. If it is satisfying the condition of section 1066, students, then we will not be taxing this particular amount. So students, 1066, all of you, just a second. Students, 1066 over here. Just keep in mind. Just read this one quickly. Are you all through with this one now, students? Let's now move further, students. So these are the two. Apart from that, exemption which has been there, students, in this context. Rest of the exemption, students, I'll be discussing it maybe in the evening session. I'll just use the time for the discussing of the other exemption if required. Now let's move further, students. Let's see, or maybe towards the end of the session. End of this session, I will consider to discuss some of more exemptions with all of you. Just let's proceed further, students, to the other discussion that we have to do it now. Let's do it, students. Let's crack it. So our next particular segment is the most important one. Now, dividend. Now we are entering into the passive income league, students. Can you see that? We are entering into the passive income league. Now you will say, sir, what is passive income? Starting with dividend, thereafter the interest, royalty, FTS income. So about its taxability. By the way, friends, last attempt, I think in the old course or the new course, they have targeted about royalty and FTS taxability. That is something that they have targeted in the last attempt, and therefore you have to be very careful for the other particular parts now. Now considering this particular factor of about 914, students, first of all, how a dividend income earned by the non-resident will be taxable in India? How a dividend income earned by the non-resident will be taxable in India? So in that case, if the dividend income is earned by a non-resident from an Indian company, so say for example, in that example of ZPLC itself, let's take up that example of ZPLC Singapore, which has got the investment in RIL shares. RIL is paying the dividend to ZPLC. Now, if RIL is paying dividend to ZPLC, then in that case, ZPLC, which is a non-resident or a foreign company, for them, this dividend income that they've received from RIL, being an Indian company, that dividend income, will it be deemed to accrue or rise in India? Will that dividend income be deemed to have accrued or rise in India? And the answer is yes. So that dividend income, students, you can see it is deemed to have accrued or arise in India under section 914. And because it is deemed to have accrued or arise in India under section 914, accordingly it will be chargeable to tax. Because it is deemed to have accrued or arise in India under section 914, accordingly, students, it will be chargeable to tax. I hope that all of you are agreeing to this one. All of you agree to this one. Okay, so that will be chargeable to tax in the hands of ZPLC, which was there in our example. At what rate it will be taxable, that we will see, students, in 115A. At what rate it will be taxable, students, that we will see in 115A a bit later. Now, considering this particular part, students, let's look upon to this quickly, students. Herein, all of you be very careful on this part. Can you see that, students? Now, here 915, 6 and 7. 915, 6 and 7, students. What this 915, 6 and 7 is all about? The interest income, royalty income, and the fees for technical service income. When this income will be deemed to accrue or arise in India, students, let's try to discuss this one out first. When these income will be deemed to accrue or arise in India, and what about its taxability? And what about its taxability? So we need to discuss out this particular part very carefully. Are you ready, students? Give the acknowledgement, students, in your message, and by liking the video, please, in the message chat box and also liking the video, give your acknowledgement if you are ready, students. Quickly. And do share this video as well, students, to your friends. Perfect. So with that, now let's start with this particular part. So when the interest income, when the royalty income, and when the fees for technical service income of whom? Income of a non-resident will be deemed to accrue rise in India. Now, students, Shelly, that will depend upon, students, that will depend upon two factors. Number one, who is the payer of the amount? The first factor is who is the payer of the amount, and the second factor is the payer of the amount. Are they making the payment in respect of the source or a business situated in India or situated outside India? The payer who is making the payment of interest, royalty, and FTS, to whom they are making the payment? To the non-resident. So the point is whether the payer who is making the payment, is he making the payment in respect of a business or a source which is situated in India or outside India. On that basis, we will decide the deemed accrual of these income. On that basis, we will decide the deemed accrual of this income. So let's have a look then. Let's have a look then, students, in this case. If you see over here, now if the government of India is making the payment, can you see that, students? If the government is making the payment, one thing is for sure, then what the government is paying and to whom they are paying, to whom you are paying is non-resident. What you are paying, whether you are paying interest to the non-resident, or you are paying royalty to the non-resident, or you are paying FTS to the non-resident. If the government of India is making the payment, students, then in the hands of the non-resident recipient, this income, these incomes will always be deemed to accrue as in India. These income, students, will always be deemed to accrue as in India. Students, keep this point in mind. These income will always be deemed to accrue as in India in the hands of the non-resident. You always keep that point in mind. But if the payer of the amount, if the payer of the amount is a resident, if the payer of the amount is a non-resident, if these are the payer, students, who is a payer? Either the resident or the non-resident. Then what is the situation, students? So if the payer of the amount happens to be a resident in India or a non-resident, then they need to make the payment. Students, be careful. They need to make the payment which is in respect of a business or a source in India. Only then this income, being interest, royalty, or FTS, which is paid to the non-resident, will be deemed to accrue rise in India. Which is paid to the non-resident will be deemed to accrue rise in India. So the question that arises with all of us is this. The question, students, that arises with all of us is this. Please pay attention, students, on this particular point. The question that arises, students, in this particular case is that, or let me in fact give you an example rather than asking you a question. Let me give an example. Taj Hotels India, students, they are resident. They have got one property in Maldives. Now, in respect of that property in Maldives, they are appointing a German architect firm. Now, the German architect firm is providing a technical service. Architect service is a technical service. So, the German architect firm is providing a technical service to whom? To Taj Hotels India. To Taj India. Okay. In respect of their property which is situated in Maldives. So, the business is in Maldives, for which the services is taken by Taj India. The business is in Maldives, for which the services is taken from the non-resident. By whom? By Taj India. So therefore, in this case, the payer is a resident. They are making the payment in respect of a business or a source which is situated outside India. And accordingly, this fees for technical service paid by Taj, will it be deemed to accrue as in India? To that the answer is no. This fees for technical services which is paid by Taj, this we will not be considered as an income which is deemed to accrue as in India. This will not be considered, students, as an income which is deemed to accrue as in India. I hope that all of you are clear with this point. All of you are clear with this particular point, students. So this is how it has to be considered. I hope that every one of you are through and clear with this particular proposition. So this income, will it be deemed to accrue as in India? And the answer is no. It will not be deemed to be accrued or as in India because it is paid by a resident in respect of their property or a source situated outside India. Consider a case of a non-resident. A non-resident, say for example, JW Marriott. JW Marriott, non-resident, US-based company, is appointing another US architect firm, for the purpose of providing the architect service in respect of their upcoming hotel unit in India. So you tell me, is the services, which is again a technical services, is taken in respect of a business or a source which is situated in India? Answer is yes. So if the services has been taken in respect of a business or a source which is situated in India, accordingly in this case, the fees for technical service which has been paid will be considered as an income which is deemed to accrue as in India. The fees for technical services, students, will be considered as an income which is deemed to accrue or arise in India. I hope that all of you are clear with this one. The fees for technical service will be considered as an income which will be considered as what? As an income which is deemed to accrue as in India. Income which is deemed to accrue or as in India. So payer is a non-resident, yes. Payee is also a non-resident. Did they make the payment in respect of this in India? Yes. So accordingly, for the recipient non-resident, it is an income which is deemed to accrue as in India. I hope that all of you are clear with this one. Now comes this very important point. Supposingly, students, there is this German company which has its Indian client. The Indian client has approached the German company to provide a technical service. Obviously, the technical service is for the business in India. Students, when the question is silent, if the question is silent, which I have seen 90% of the questions are silent about the business or the source for which this particular service or a loan has been taken, they are silent about it. They will only tell you that the payer is a resident and the payee is a non-resident, but they will keep quiet about for which purpose that the service, for which business that the service is taken or the loan has been obtained from the non-resident. They will be silent on that. So if they are silent on that, students, then you will always make an assumption that it is in respect of a business or a source which is situated in India. Okay. So in this example, the German company was approached by the Indian resident to provide a technical service. The German company was approached by the Indian company to provide a technical service. Okay. Now 50% of the technical service, the German company provided while being in India. While being in India, the German company, they have provided a technical service. Whereas the other 50% of technical service, they provided from their remote location. They have provided from the remote location. It is also known as offshore. So one is offshore and another is onshore. This is a term that they will use in the examination. So offshore means from their own location, they are providing the services to the Indian client. And onshore means while they are in India, they are providing this particular service. Now, the German company are raising two invoices. The two invoice is depicting the services that they have provided from the remote location offshore, and next invoice is depicting the services that they have provided while they were in India. So they have raised two invoices on the Indian client. So question to all of you therefore is whether they will be required, whether the deemed accrual of income, whether the deemed accrual of the income, which income? Fees for technical service income. Whether this deemed accrual of income is it restricted only to a category of the service which they have provided in India, or it is for both onshore as well as offshore that you will consider for the purpose of determining how much of the deemed accrual of such income has taken place in India. Tell me then in that case, students, is it applicable only to a category of the services which they have provided in India, or it is to be made applicable or extended to both the cases of onshore as well as the offshore services in India? So the answer indeed, students, is it will be extended to both, that is onshore as well as the offshore services in India. It will be extended to both the onshore as well as the offshore services in India, students. I hope that every one of you are clear with this one. What you have to see, not where the services are provided. Where the service is provided is irrelevant. What is important is to whom they have provided the services, to whom they have provided the services. That is what is a catch. So if the services is provided to a resident or a non-resident, then whether that services is obtained in respect of their business or a source situated in India. If that services is obtained in respect of the business or a source which is situated in India, then in that case the income, which is fees for technical service income or interest income or royalty income, will always be deemed to accrue or rise in India, irrespective of two things. Now, which are those two things? Number one is where the non-resident has provided the services, and it is also irrespective of point number two, that is whether that German company, that is a non-resident, do they have any physical presence in India or do they have any business connection in India. These are irrelevant factor thereafter once it is concluded that the services are taken by resident or a non-resident who are the payer of the amount. The services are taken by the resident or the non-resident in respect of their business or a source situated in India. Then in that case, it becomes irrelevant factor that whether the non-resident service provider, did they actually provided the services in India or rendered the services in India. It is also irrelevant to further determine whether the non-resident has got any place of business or a physical presence or a business connection in India. These becomes irrelevant factor. I hope that every one of you are clear with this one, students. Now, apart from that, now here, students, I feel very strongly one case law of Supreme Court, which the ICI has put up in the December 21 RTP, which wasn't being targeted neither in the old course or the new course. This is very important to me. I have covered in the chart. I'll just show you, but let me first discuss this one out and then we'll discuss this case law. This is absolutely important. Now, let's consider this particular part, students. Interest 915. This one, interest assessment. Now, friends, here, before we look into a tax rate, let's forget a tax rate. There is a concept of distinct person. All of you agree. Just take an example, students. Citibank head office in US and the Citibank branch in India. Actually, both of them are same person. The head office in US, Citibank, and the branch in India, both of them happen to be the same person. Do you all agree to this one? Yes. Now, if Citibank head office has given a loan to Citibank India, the branch, and the Citibank India, the branch, are paying the interest to its head office. Question therefore is whether this interest amount received by the head office, will it be taxed under section 915? Will it be taxed under section 915? So accordingly, please bear in mind one thing. As far as 915 is concerned, it requires the existence of two persons. As far as section 915 is concerned, students, it requires the existence of two persons. Who are they? The payer of the amount and the payee of the amount. The two persons are the payer of the amount and the payee of the amount. And who is the payer of the amount in this particular case? You all are aware. The payer is in this case is the head office, and the payee is a branch. Now when you talk about payer and payee, it means two distinct persons. When you talk about payer and payee, it means two distinct persons, whereas head office and branch, they are the same person. So therefore, because they are the same person, therefore the payer and payee relation doesn't exist. The two distinct person of payer and payee doesn't exist, and accordingly the interest that is paid cannot be taxed in the hands of the recipient. US based head office, isn't it? And accordingly, students, accordingly they have given what, students? Accordingly, students, they have given this particular explanation which says that, students, be careful. Accordingly, they have given an explanation which says that in the case of what, students? The head office and branch. Be careful what I'm saying now, students. In the case of the head office and the branch being a distinct person, I'll rephrase it. In the case of a non-resident which is engaged in a banking business, this explanation, students, is applicable only for the non-resident which is engaged in the banking business, because in your GST such explanation extends to all, but in income tax law this is only applicable for the non-resident who are engaged in the banking business. Be very careful about this. So a non-resident, students, who is engaged in the banking business, the non-resident who is engaged in what? In the banking business, then establishment of that non-resident in India, and it's another establishment outside India. The establishment of that particular non-resident which is engaged in the banking business in India, and it's another establishment outside India, they will be deemed to be a distinct person. They will be deemed to be a distinct person. And now, students, if they are deemed to be a distinct person, we all are aware what will be the conclusion finally. If they are deemed to be a distinct person, students, we all are aware what will be the conclusion. All of you, I hope that all of you got hold of this one. The conclusion is that whether this interest paid to the head office, whether the interest which is paid to the head office, will it be taxable in India? And the answer is yes, it will be. And the answer is yes, it will be, students. Be very careful about this part. Now with that particular case, students, let's come to our next particular part. Here in the tax rates. Now before that, students, the royalty assessment. Students, now the next part, students, in the case of this one is about the taxation of royalty. So the royalty FTS. So first of all, students, it is equally very important that we understand the meaning and the definition of royalty income. Very important, student, it is. And why is it so? Because the case law which I'm going to discuss will have some impact on this definition. Just have a look to this definition, students. And I'll decode this definition of royalty first with all of you. So in this case, before we can proceed further, I'll just try to take you through to the checklist. Otherwise, it will become very confusing for many students later on. So let me in fact give you a checklist herein. So this is a checklist, students. Checklist for interest, royalty and FTS income of the non-resident. interest, royalty, and the FTS income of the non-resident. Another checklist is one about when the income interest, royalty, and FTS is deemed to accrue in India. That is the first. Accrue in India. Second is when the income shall be characterized. This is where the question is going to be there in your upcoming examination of May 22. When the income shall be characterized as royalty, or FTS income. When the income will be characterized as royalty and FTS income. And the third one is the assessment of royalty and FTS income. And fourth one is the compliance, means the ROI. You will find the question in one of the two. You will find the question, students, in one of the two. And what is that? One of the checklists you will find. One of the checklist, students, you will find your question in the examination. Last time, I remember, this was on this, point number 3. On the assessment, 44DA 115A, remember that question? 44DA and 115A was the question that was been targeted last time, students. So that was the last time question that we have targeted. This time, for May 22, I am betting myself on this. I am betting myself on this one. When the income shall be characterized as royalty and FTS. Okay, let's quickly run through them then in this context, students. So over here, if you see, students, very carefully, students, if you all see to this one, are you ready, students? Let's have a look. So the royalty and FTS income, students, just have a look here. Transfer of, just a second. So the royalty assessment, can you see that, students? Now, what it says? It says about the transfer of all or any right. Transfer of all or any rights for patent, trademark. Students, be careful. Patent, trademark, or be very careful. So this is about industrial royalty. Industrial royalty. This is about the industrial royalty. Industrial royalty, students. Please take a note of it, all of you. This is the industrial royalty. So transfer of all or any right of patent and trademark. This is referred as an industrial royalty. Now, what about the next one? Or use or right to use any industrial, commercial or scientific knowledge, experience or skill. Can you see that? Knowledge, experience or skill. This is known as what? This is known as knowledge royalty. Knowledge royalty, students. And the next one, can you see that? Equipment. So this would be known as what? Equipment royalty, students. This would be known as equipment royalty. I hope that all of you are clear with this proposition. So there is an industrial royalty, then there is a knowledge royalty, and then there is an equipment royalty. So the 3 royalties in front of you, students. In front of you. After that, the transfer of all or any rights. Now be careful, students. This is the case of 3 royalties done. Which are the 3 royalty? Industrial royalty, patent, trademarks. Knowledge royalty, which is the industrial, commercial, scientific knowledge, experience or skill. And the equipment royalty means the equipment, which is, you'll say, sir, what is equipment royalty? Many students are asking this thing. So equipment royalty, students, means some very highly sophisticated use of the equipment is allowed to you, for which you are giving us service charges or higher charges, whatever it be. Highly sophisticated equipment, for which you are giving us the service charges or higher charges. So in respect of those equipment or the plant, if the amount is being paid to us, then that is what will be referred as an equipment royalty. And the next royalty is the copyright, IPR royalty. I think all of you are aware of it. IPR royalty, students, I think all of you are aware of the IPR royalty, isn't it? What is IPR royalty, students? What is IPR royalty? All of you should be aware of this one, students. The IPR is the copyright cases. So all this particular part, students, has been there. The IPR royalty, students. So all about the copyright. So this is about the IPR royalty in this context. Fine, students. This is about the IPR royalty in this case. So there are industrial royalty, knowledge royalty, equipment royalty, and then there is a copyright royalty. Okay, for all these, case of the copyright, literature, the film tapes, so everything is copyrighted, the books and all. When I say, for example, I'm an author of the books which is published by Bharat Law House, so the amount, and that is a copyrighted material. So the amount which Bharat Law House pays to me is a copyright. So that is a royalty income. Is that a royalty income? To that the answer is yes. So that will be considered to be royalty income. So this is what is the characterization of the royalty income. This is a characterization, students, of the royalty income. Now in this particular context, students, so far as the characterization of royalty income is concerned, be very careful. So far as the characterization of the royalty income is concerned. Now herein, students, all of you have to be extremely careful on this particular part. Royalty, students, as you all have done it, royalty, students, as you all have done it, students, in this case. Now taxation. Now I will just talk about first while, because we will be discussing only the NR taxation, but there is a for resident SSE resident. I'm just using this opportunity to take you through to what are the special provision of royalty taxation in the hands of whom? In the hands of the resident SSE. What is the special provision of royalty taxation in the hands of the resident SSE? So I'm just very quickly on the sidelines, I'm discussing this particular point with all of you. Special provision. You should take a note of it, students. A historical note. That is what I can say to all of you. So the special provision which exists, students, is in respect of 2. And what is that, students? Industrial royalty. Industrial royalty, which is the patent income. And the second one, students, is the IPR royalty, the copyrights. So the special provision, students, is in respect of 2. The special provision is in respect of 2. I hope that all of you are clear with this one. Have you copied this particular part, students? Now, so far as industrial royalty is concerned, be careful, students. What did I told you? Be careful. So far as the industrial royalty is concerned, students, here another question that will arise is this. Be careful, as I told you. Another question that will arise, students, will be that whether the whether the conditions, please write, of section 115 BBF whether the condition of section 115 BBF is satisfied. Answer is yes or the answer is no. Answer is yes or the answer is no. If the answer is yes, then the royalty shall be assessed without any deduction of the expenditure at 10%. If the answer is yes, students, this is the point. And if the answer is no, students, what is that point we are going to say? Students? So if the answer is no, we shall say in this case, if the answer is no, students, then we shall say in this case that royalty shall be assessed normally. Expenses will be allowed as deduction. Expenses will be allowed of this. Further, the deduction under section 80 RRB shall be allowed of maximum rupees 3 lakh. Further, the deduction under section 80 RRB shall be allowed of maximum rupees 3 lakhs. Okay. The net income, the net royalty will be taxed. The net royalty will be taxed at normal rate applicable to the person. At the normal rate applicable to the person. The net royalty will be taxable at the normal rate applicable to the person. Is that clear to all of you, students? All of you are through with this one? The net royalty will be a tax at normal rate applicable to the person. Fine, students. Now, if it is a copyright royalty received by the resident, so students, it will be 80 QQB. And what is the status of 80 QQB? Same thing, students. whatever you have discussed for this, whatever you have discussed for this one, students, primary, the same would be applicable. Same would be applicable. Nothing different, students. Did you got this one? Nothing is different. So these are the charts that you have to copy. Otherwise, I could have made this chart also there. But I can tell you, students, you would not have registered this in your mind. It is important that few charts you need to prepare at least so as to get a hold of it. Otherwise, difficult, students. So students, I took an opportunity to do quickly the special provision relating to royalty taxation in respect of the resident. While we are discussing the non-resident taxation, I'm taking this opportunity. Now, many students are asking, sir, what is, we know 80 QQB and all, but what is 115 BBF? So 115 BBF, students, is relatively a very new provision which speaks about what? Which speaks about the fact that herein the concessional taxation regime for the royalty income in respect of the patents developed and registered in India. Can you see that? So to encourage the Indian resident to develop the patents, to do the research and development activity in India, so that whatever innovations that they get a breakthrough out of this research, they should register that breakthrough, get the patent in India. And then thereafter, students, whatever is the royalty income that they are going to earn by maybe giving this particular they will be giving this particular innovations to the other particular person. So whatever is the royalty income arising from this will be taxed under 115 BBF at the rate of 10%. Now the challenge, and many students will be of the opinion that, sir, how do we determine in this regard? That this person has done the research and development in India? Because that is the primary condition for the purpose of getting this benefit. Because after you did the research, there is a breakthrough. After the breakthrough, there is a patent. After the patent, there is a supply of the patent. And from the supply of the patent, there is a royalty income. There is a chain of this. So how do we establish that you are doing a research in India? So that is established through this particular proposition, that at least 75% of the expenses should be incurred by the eligible SSC in India. So that is what it is. The most notable feature of this is, we will see also in MAT, the most notable feature of this 115 BBF is that MAT provision is not applicable to this. MAT provision, students, is not applicable to this one. So therefore here, not only that it is, so ultimately this royalty income is taxed only at the rate of 10% under section 115 BBF. So if it is a domestic company which is getting this royalty income and which is assessed under 115 BBF, then while the domestic company will compute the book profit, this royalty income will not form part of the book profit. This is what you just need to do it, students, and that should be all. That should be all, students. Now we will be discussing, students, in this regard the issues which are there. This is where the question will come, student. This is where your examination question will come. This is where your examination question will come. Are you ready for this one, students? Now, students, quickly the assessment. But before we do that, now for the non-resident students, have a look to the fees for technical service. Let's first deal with this one. Now, fees for technical service, students, as you can see, FTS income, as you all can see, students, means any consideration including the lump sum consideration for rendering of any managerial, technical or consultancy service. Managerial, technical or consultancy service, and it includes and it excludes. Includes what? Including the provision of service of technical personnel or other personnel. So rendering of what? Of any managerial, technical or consultancy service, and it includes this and it excludes that. So students, if there is a rendering of any services, so it inherently imply that there is an human involvement which is to be there. If they are using the term rendering of a service, so automatically, students, the human involvement has to be there. Only then you can say that something is rendered. Then only you can say, students, that something is rendered. I hope that all of you are clear with this one. That something is rendered, the human interface is absolutely necessary. So therefore, if there is a standardized facility which is there, if there is a standardized facility which exists, like for example, the internet connection for which there is a data plan, and for that data plan I'm making you the payment, so can we say that there is a technical service which is getting provided to me? Can I say that there is a technical service which is getting provided to me? And the answer is no. It cannot be said that there is any technical service which has been provided in this particular case. And the reason is very clear now to all of you. The reason is very clear to all of you students. It cannot be said that there is any technical service which has been provided in this particular case. Is that clear to all of you students? Why? Because there is no rendering of service. The human element is missing. It is simply a standardized facility which has been extended, not provided. It has been extended as per the subscription that you have taken. So this is not a technical service. Fine students, now for the evening class for 5 p.m. students, before I will be doing the difficult issues in the evening. The difficult and the trickiest one in the evening students. So therefore, but before that, the other part which is there, which you have done it in the examination also, students. Quickly students, this part I want you to do it. The difficult 5 p.m. students, 5 p.m. we will have again the live session. Very difficult parts we are going to do. NR taxation, transfer pricing, paper 7, equalization levy. All the students be ready with this one. Now those who are wondering, sir, from where we will get the chart? Again, I'm telling you, the bookstore, you can contact to the bookstore and get the chart from the bookstore, students. You can contact to the bookstore and get the chart from the bookstore. You can just take the number of WhatsApp the bookstore 97794300034. 97794300034. You can contact to that bookstore and you can get this particular chart from them. 97794300034. WhatsApp them and get that particular book from that bookstore. Now students, coming to this one, this was asked in December 21 attempt. So I don't feel that this is that important, but still, how you will do the assessment of royalty and FTS income? How you will do the assessment of royalty and FTS income? Student, the assessment of royalty and FTS income will depend upon what? Whether the services has been provided through the permanent establishment situated in India. The services have been provided through a permanent establishment situated in India. Many a time, students, they give you a question where they say that there is a permanent establishment in India, but the services are not provided through that particular P in India. So if the services are not been provided through that particular P in India, it is as good as students that the P does not exist. It is as good as the P does not exist. Okay. Now, if the services are being provided through the particular permanent establishment in India, then the assessment of the royalty and FTS will take place under section 44DA. The assessment of the royalty and FTS will take place under section 44DA. But if you say what? No, sir, this is not been routed through the P in India, or there is no P in India, then in that case, the assessment of the royalty and FTS will take place on a gross basis. What do I mean by gross basis? Gross basis means without giving any deduction of the expenditure. The assessment will be under section 115A. And that tax rate would be at the rate of 20%. So 10% under 115A. 115A. No deduction of any expenditure. But what if it is routed through the P in India? If it is routed through the P in India, then in that particular case, students, as you all know, the assessment will be on a net basis. And will you be allowed the deduction? Yes. But there are some restriction so far as the deduction of the expenditure is concerned. There are some restriction. And what is the restriction? No deduction in respect of expenses not incurred wholly and exclusively in relation to PE or a fixed place of profession in India. So therefore, in this particular context, students, whatever is the expenditure which is in relation to the PE or a fixed place of profession in India, so if it is not relating to that, then you will not be getting the deduction. Say for example, students, there is a head office expenditure, and the head office expenditure is apportioned to the Indian PE also by the non-resident. So whether this particular head office expenditure apportioned to the Indian PE, will that be allowed as deduction? And the answer is no. But what if, students, if there is a reimbursement of the P expenditure? Who is doing the reimbursement? P is doing the reimbursement. To whom they are making the payment? To the non-resident they are making the payment. To the non-resident they are making the payment, students. So to the non-resident, to their foreign head office they are making the payment. Who has made the payment? P has made the payment. To whom they are making the payment? To the non-resident they are making the payment, the head office. And that payment is the reimbursement of whose expenditure? The P's expenditure. P expenditure. So in that case, whether the reimbursement of the P expenditure incurred by the non-resident head office, will that be allowed to you as a deduction? Answer is yes, it will be. Yes, it will be. Students, yes, it will be. Now the last particular part, students, which I will deal with it, because in the evening class 5 p.m. I will be dealing with some very difficult area of the provision. But just very quickly, I just want to discuss with all of you. The return filing exemption, students. Can you see that? Students, there is an amendment which was being made. I think all of you are aware. Last year itself, they have made this amendment. And as per the amendment, students, you should be aware of this part. That if supposingly the non-resident has got only which income? Dividend income or interest income or royalty income or FTS income. So the NR has got only this income. Okay. So other than this, there should not be any other income. And what? And the TDS, students, has been deducted. The TDS has been deducted as per what rate? As per the rate you should know, as per the Act rate. As per the Act rate, students. So if the TDS has been deducted as per the Act rate, not as per the treaty rate, be mindful of this fact. Not the treaty rate. Be mindful of the fact, students. Then in that case, whether the non-resident will then be required to deduct the whether the non-resident will then be required to file the ROI. Whether the non-resident will then be required to file the ROI, and the answer is no. This exemption you should keep in mind. This exemption, students, you should keep in mind. And I should tell you that this exemption also exists in 2 other places. Do you want to know which are the other 2 places where this exemption exists? There is a case of a non-resident sports person also. Remember 115 BBA? Non-resident sports person 115 BBA. In that non-resident sports person 115 BBA, if the non-resident has got only the 3 income. Which are the 3 income? Participation of matches played in India, thereafter the advertisement, and last is the contribution to the magazines, the sports magazine, etc. And what, students? So these are the only 3 incomes. And students, very importantly now, please pay attention. And very importantly, please pay attention now. The TDS has been deducted under 194E. Not as per the treaty rate, but as per 194E, which is the 20% plus the HEC, makes it at 20.8. So if the TDS has been deducted at that rate, then and only then the exemption is available to the non-resident for filing the ROI. So the specific income, only the specific income that they have got in India, and the TDS is as per the Act rate. The TDS is as per the Act rate, then yes, there is an exemption to file the ROI. There is an exemption to file the ROI. And the last point of the filing exemption to file the ROI, the last point for the exemption to file the ROI is in the NRI topic. So there are 3 places of the exemptions which exist. There are 3 places of the exemption, students, which exist so far as a non-resident is concerned. 3 places of the exemption, students, it exists so far as the non-resident is concerned. Which are the 3 places? One place is already I told you, dividend, only dividend, interest or royalty or FTS income, which is accessible under section 115A. So, students, these are the income which is accessible under which section? Accessible under which section? 115A. 115A. And the TDS is deducted as per the Act rate. The TDS is deducted as per the Act rate, not as per the treaty rate. The TDS is deducted as per the Act rate and not as per the treaty rate If these conditions are satisfied, then we can say that the NR will be not required to file the return of income. The second place where the non-resident gets the exemption is the case wherein the non-resident sports person having only 3 categories of income and the 3 categories of income are: number 1, the from the participation of matches in India, advertisement, and the last but not the least, students, is exactly contribution to the articles in the sports magazines and all. So if the non-resident sports person has only these 3 income and they are assessed under 115 BBA, TDS has been deducted at the rate of 20.8. TDS has been deducted at the rate of 20.8. That is 20 plus the HEC. Not as per the treaty rate. Not as per the treaty rate. In that particular case, we shall say that the non-resident sports person will be eligible for exemption. And the last one is about Chapter 12A, wherein the NRI, we are talking about the NRI. The NRI students, that non-resident Indian has only the specific income which is given to you in that NRI chapter, on which the TDS has been deducted, as per the rate which is specified in Chapter 12A, as per that rate, not as per treaty rate. Again, not as per treaty rate, but as per the rate which is specified in Chapter 12A, which is 20%, 10% respectively. Then in that particular case, there is again the exemption to file the ROI. Then in that case, there is an exemption to file the ROI, students. That's exactly what it is. I hope that every one of you are clear with this one. Now, students, the difficult area now I'm going to do with you in the evening 5 p.m. lecture, 5 p.m. class, link of which I have given you in the description box. Lecture number 4. Link is available in the description box of this video. That I will see you live today at 5 p.m. Sunday, 27th. 5 p.m. live, we are going to meet on this particular session. Are you ready? So ensure to connect at 5 p.m. The most important and the difficult area is what we are going to unfold in the evening class. Okay, students. So with that, we'll conclude our session today. Now, very quickly, an announcement. As you all are aware, students, in Unacademy, herein, the iconic feature, students, one important area, students, which I just wanted to tell you about this one. In the Unacademy, mega scholarship test, students, is there tomorrow. Students, mega scholarship test is there tomorrow for CA Foundation Intermediate, Primary, for CA Foundation Intermediate Group 1 and Group 2. Tomorrow it is there, students. Do take up this test and do tell your juniors, your friends to take up this test. You all know the platform is fantastic, splendid with all the features. So there is a mega scholarship, because I think the results are just yet out. Many students would be wanting to opt for their coaching. Why not to get it through the scholarship scheme when it is already available? Isn't it? Makes sense. So do let them know, students. Accordingly, I'll see you today evening 5 p.m. without fail, students. Do attend live and do tell to all the students. The link of the part 4 is there in the description box. See you then, students. Take care.